better off. The bill passed out of this committee is an investment in the future, not a venue for empty relitigating of fights from the past. But if folks do want to discuss the past, here are the facts. The 2002 Farm Bill was the last farm bill to invest in the commodity programs. The Democrat-led 2008 Farm Bill, not this committee, not this current committee, cut money out of the crop insurance while investing in conservation and nutrition programs. Because of a deficit reduction exercise, the 2014 Farm Bill saw commodity programs cut by over 30%, while conservation and nutrition were left relatively unscathed. Finally, since the enactment of the 2018 Farm Bill, Democrats in Congress unilaterally added billions to climate and conservation programs, and the current administration added $250 billion to the nutrition programs, all while ignoring the farm safety net. The romanticized Farm Bill coalition, often talked about as one-sided, partisan talking point. Producers are constantly reminded of hundreds of billions of dollars of SNAP and climate spending and reprimanded when they seek any level of parity. Now, I will not apologize for advancing a bill that seeks to put the farm back in the Farm Bill. I also won't apologize for advancing a bill that was written by every member of this committee. 40 provisions that were put into this that were just led by my Democratic colleagues and friends. And I don't put things in legislation just to kind of buy a vote. I put it in there because it was great legislation. It helped to put the farm back in the Farm Bill. 140 provisions that were led in a bipartisan way, at least one Democrat, one Republican. So a strong bipartisan bill that puts the farm back in the Farm Bill. Now, I'm tired of the politics and the gamesmanship, and I know folks out in the countryside are too. Unfortunately, through this process, I've been saddled with a meddling Senate Democrat and others who do not seem to appreciate the dire circumstances in farm country. As recently as last week, House Ag Committee Democrats expressed a preference to see a bill fail before engaging. So I will say this again. If there are members on the other side of the aisle who truly want to see a farm bill come to fruition this year, my door remains open to renegotiation from any partner willing to come to the table with a serious proposal and not more red lines. For those who believe that the only path forward with the time we have remaining in this Congress is an informal pre-conference negotiation with the Senate, that is not my preferred option. But it is one I'm willing to entertain. However, I cannot reconcile nor negotiate a bipartisan 900-page bill with a partisan 90-page summary. For that to be viable, Chairwoman Stabenow needs to unveil her bill text. I hope that after listening to our guests today, everyone in this room and watching across the country will understand the urgency by which we must act. For the first time in a long time, this committee has a chance to be proactive instead of reactive to prevent disaster for our producers rather than picking up the pieces afterwards with ineffective and inefficient ad hoc support, and to establish a foundation for the future of the farm economy. Let's not waste that opportunity. And with that, I'd now like to welcome my good friend, distinguished ranking member, the gentleman from Georgia, Mr. Scott, for any opening remarks he would like to give.
And thank you, Chairman, and it's good to see you and be with everyone this morning. Ladies and gentlemen, our hearing today is focused on farm financial conditions and the well-being of our farmers and the health of our rural communities. Over the past few years, we have heard the cry for a stronger farm safety net. And here's why. Commodity prices are not keeping up with higher input and credit costs. That is where we are and why we need to really address this issue to help our farmers. It is clear that we need to come together, Republicans and Democrats, on a farm bill that strengthens the farm safety net, and we're going to do it together. I remain committed to enacting a truly bipartisan farm bill this Congress that enhances the safety net for our farmers and protects the safety net for hungry families as well. Our challenge remains today what it was before. How do we pay for what we need to be done in the Farm Bill? I remain concerned that the pending 2024 Farm Bill eliminates USDA's ability to use CC funds to help insulate and protect our farmers from market shocks. Ladies and gentlemen, in 2020, then Agriculture Secretary Sonny Perdue, my good friend, who I served with him in the Georgia State Senate as state senators, Secretary Perdue used approximately $23 billion in CC funds for the coronavirus and food assistance program. And this helped our farmers survive lower prices that were rising as a result of COVID-19. We didn't restrict the CCC when my friend Sonny Perdue was Agriculture Secretary, and we must not do it now for the same reason. In 2018 and 2019, Sonny Perdue used the CCC for the Market Facilitation Program, which distributed $23 billion in payments to eligible farmers to help offset losses from the Trump trade war. And while Secretary Perdue's trade aid program had many faults, the ability of USDA to help farmers stay afloat was essential. We will hear more about this from our witnesses later today. And I also want to call to everyone's mind that both former President Donald Trump and his partner, Senator J.D. Vance, have promised even more tariffs and trade wars. They've said so. The Republican Party even enshrined this in their official party platform last week. So let's be real. There's no way we got the farmers' best interests at heart if we're going to remove the CC helping hand. And when our contenders for the presidency on the Republican side have already said they would do a trade war. American farmers bore the brunt of the trade war the last time, and they would be hard hit again if Republicans pursue an economic agenda that will undermine the stability of the American commodity prices and lead to a retaliatory tariff war. The prospect of a new trade war while eliminating the Secretary's CCC authority, the only tool that kept family farmers afloat, is nearsighted and it is dangerous. Bottom line, if we want to get a farm bill done this year, as these witnesses who are before us want, we have to find a different way to pay for it without locking away this important tool for 5 years. We got to have the CCC. I am sincere in my offer to you, Mr. Chairman, my friend, to work on a bipartisan basis to find an acceptable improvement to the bill and to bring it to the floor. Time is marching on. As I pointed out in our last hearing, we're in a desperate time situation. I look forward to working with you in the committee, and Democrats on my side look forward to working together. There's nothing we want more than a good bipartisan bill. I look forward to hearing from our distinguished panel today as they share their work in addressing the current financial situation of our farmers across our nation. Thank you, Mr. Chairman.
I thank the gentleman. The chair would request that other members submit their opening statements for the record so that our witnesses can begin their testimony and to ensure that there is ample time for questions. To introduce our first witness today, I'm pleased to yield to the gentleman from Minnesota, Mr. Fenstead.
Thank you, Mr. Chair. Mr. Chair, members, it's an honor for me today to welcome my friend and constituent of Southern Minnesota to the committee today, Ms. Dana Allen Tully. Dana is a great example of Southern Minnesota values. She serves as president of the Minnesota Corn Growers Association, where she advocates on behalf of 7,000 farm families, including mine. She has dedicated her career to agriculture as a leading voice for farmers in Minnesota and across this country. As long as I've known Dana, she has always said yes to every opportunity to give back to her community. Dana and her family own and manage a diversified family farm near Eota, Minnesota, where she raises dairy and produces corn, soybeans, alfalfa, alongside her parents, brother, and husband Jim, who's with us here today. Dana is a product of the University of Minnesota. Go Gophers. That's where I met Dana years ago. She received her undergraduate education there as well as a doctorate in ruminant nutrition with the focus on dairy. One of the smartest people that I had the honor to go to school with. Dana, thank you for joining us here today. We look forward to hearing your testimony about the issues affecting corn growers and the overall farm economy. And Mr. Chair, with that, I yield back.
Thank the gentleman. Now, I'm pleased to introduce our second witness. Pleased to yield to the gentleman from North Carolina, Mr. Rouser.
Thank you, Mr. Chairman. It's my pleasure and honor to introduce Mr. David Dunlow, who I have known for a long, long time, and a great farmer in North Carolina, big in cotton, peanuts, and everything else, and or at least originally in peanuts, way back when we first met. He's an incredible farmer and been a great advocate for the industry for many, many years. Great to have you here.
Thank the gentleman. Our third witness today is Mr. Tony Hotchkiss, the chairman of the Agriculture and Rural Bankers Committee for the American Banking Association. Welcome. Our fourth witness today is Mr. Joey Caldwell, who is the senior vice president for retail for the Greenpoint Ag Holdings, LLC. Welcome as well. And our fifth and final witness today is Dr. Ronald Rainey, who is the assistant vice president, professor, and Center Director for the University of Arkansas Division of Agriculture. To all of our witnesses today, thank you for joining us today. You each have 5 minutes. The timer in front of you will count down to 0, at which point your time has expired. Dr. Allen Tully, please begin when you're ready. Go ahead and press the microphone. There you go.
Head come on. Okay. Okay. Thank you. Chairman Thompson, Ranking Member Scott, committee members, thank you for inviting me to testify. My name is Dana Allen Tully, and my family and I operate a diversified family farm near Eota, Minnesota, where we produce dairy, corn, soybeans, alfalfa, and vegetables. I also serve as president of the Minnesota Corn Growers, representing thousands of farm families. I'd like to begin by thanking each of you for serving on this committee and for the work you do on behalf of farm and ranch families, rural communities, and all people who are helped by the Farm Bill. I don't want to be discouraging this morning, but it's important to provide a glimpse at today's economic picture for agriculture. Unless conditions change, we're facing a perfect storm, though I don't think it will be fully understood until early next year, when farmers are unable to secure loans because they can't cash flow. Plummeting crop prices, high costs of production, doubling interest rates, natural disasters, and tightening credit are some of the key culprits. Working capital is fast depleting. John Deere's layoff of thousands of workers is a canary in the coal mine. A farm bill extension will not stop the hemorrhaging. Even a new farm bill with a strong safety net may not be timely or sufficient, though I pray Congress passes a farm bill this year because it will help in the long run. In the near term, Senator Heinrich has said that Congress must pass a disaster supplemental as soon as possible. If things don't turn around, a supplemental may be needed to address production and economic losses. USDA says farm income will fall sharply this year. The biggest year-to-year drop on record. Net farm income will fall $43 billion, or 27%, after falling 19% from 22 to 23. Since 22, net farm income has fallen 40%, the largest two-year drop on record. The national average corn yield a farm would have to make this year to break even is 219 bushels per acre, 27% higher than the 10-year average, and for soybeans, it's 56 bushels, or 12% higher. This is true across commodities. We're all facing losses of more than $150 per acre. The University of Minnesota puts our losses at $233 per acre. Bottom line, farm and ranch families need help. What can you do? Putting aside other issues, the commodity title and crop insurance provision in the House Farm Bill are excellent and would go a long way in helping all farm families, regions, and commodities. The PLC ARC reference price represents a 40-cent increase, and along with the reference price escalator, should help carry us through to better times. It also makes key improvements to ARC, updates pay limits, and helps to ensure eligibility rules don't lock family farms out of the safety net. My family members and I work on the farm, but we want to make sure our farm passes on after we continue, or continues after us. So we recruited a couple of young, great farmers, beginning farmers who are working with us. We regard them as family, and we hope the Farm Bill will ensure farm families like ours are not penalized. If the Senate committee can produce a bipartisan bill very soon with the same safety net provisions, Congress will be well positioned to pass a farm bill farmers can count on. Second, urge USDA to resume ERP payments for 2022, and 2 years is a long time to wait. And third, watch the farm economy over the coming months, and if that perfect storm keeps developing, consider a disaster supplemental covering production and economic losses. In Minnesota, we've had a lot of flooding. In other parts, there's severe drought, and all producers are facing economic losses because prices don't cover our costs. During the 1980s farm financial crisis, a lot of farms and Main Street businesses were lost. Help came, but it was too late. The next big crisis began in 1998. Congress took immediate action and prevented devastation, showing an ounce of prevention is worth a pound of cure. Beyond the Farm Bill, there are lots of other issues impacting producers. We have a record trade deficit of $32 billion. The U.S. used to be always run a surplus. We need new trade agreements to open up foreign markets. We should not cede world markets to countries with poor environmental and labor standards, especially to our adversaries. We need to promote biofuels like ethanol, which are good for the environment, jobs, and family pocketbooks. Rules implementing sustainable aviation fuel tax credits, CAFE standards, and other flawed regulations are locking out American farm families from offering proven solutions while extending these opportunities to Brazil and China. I will close with this thought. We are experiencing unprecedented rates of hunger. American farm and ranch families are the solution to this crisis. A USDA official told us by 2050 there will be 10 billion people on the planet. He also added that we will need to plow up all of the world's forest land to feed everyone. That sounds ominous, but we've been here before. In the 1970s, we faced the same grim news, but an Iowa farm kid named Dr. Norman Borlaug, whose statue is in the Capitol Rotunda, said America's producers got this, and we did. Secretary Vilsack honored Dr. Borlaug for saving billions of lives and millions of acres of pristine forest land. We can do it again, but we need good policies to help us. We put everything on the line for a thin and often negative margin. Young people aren't going into farming, and that's why the average age of farmers is nearing 60. Farmers love their kids, as all parents do, and no parent wants their kids to go through life facing constant worry. We need full-time farm and ranch families. We also need Washington to make the right decisions to help producers defeat hunger both at home and abroad. Thank you for the opportunity to testify.
Thank you, Dr. Alentale. Mr. Dunlow, please begin when you're ready.
Good morning. My name is David Dunlow, and I farm in Gaston, North Carolina. I currently serve as the chairman of the American Cotton Producers. My wife Deborah and I have 3 children, and my son William and I have farmed 3,800 acres of cotton, peanuts, soybeans, corn, and wheat, mostly on rented land. In North Carolina, production costs are all well above the market prices. There's not a single commodity I produce that will cash flow. I and other Southeastern producers are hanging on by a thread. Our industry has heard from lenders across the country who has seen producer equity erode. And without federal assistance this year, many of these lenders will no longer be able to finance growers. I have never experienced a worse time in my 40 years of farming, and the stress has taken a toll on my health as I wonder how our operation will survive. In previous years, when market prices were below cost of production, growers could benefit from the commodity title to offset losses. However, that is no longer the case. The reference price, established back in 2018, long before the disruptions of COVID, has not kept pace with inflation, rendering the safety net ineffective today. The results have been back-to-back years of losses on our farm, and next year could be just as bleak. Over my career, I have been able to purchase several small farms. Now I have been forced to refinance all these farms to pay my operating debt from last year. Because of our deteriorating financial condition, I have not found any traditional lenders willing to fund our operation. We must rely on an operating line of credit from a private, equity-funded institution at a higher than market interest rate. We have also been unable to afford the enormous cost of upgrading our farm equipment. In 1990, the cost of a new cotton picker was around $40,000, and the price of cotton was around 74 cents a pound. Today, a new cotton picker is $1.1 million, and cotton is still trading in the low 70s, nearly 35 years later. It is the dream of my son William to one day take over my farm and oversee the operation on his own. However, William is forced to diversify his income to support his family. William's 2 sons, Hank and Clyde, love being on the farm with their granddad. I hope my farm can continue to sustain itself so that one day Hank and Clyde can have the option to take over. We all talk about new farmers. I gave my future son-in-law, Peyton, who has an agricultural degree from NC State, an opportunity to work on the farm. However, after having discussions with my daughter, he had decided to seek employment elsewhere due to the lack of profit provided by our operation. In closing, I want to commend the committee for advancing a bipartisan farm bill that addresses the significant challenges of all growers. The bottom line is producers need real relief before the end of this year. We can't wait any longer. Members of Congress must understand that another straight extension of the current law is unacceptable. Without support in 2024, I may no longer be able to farm. Many others are in the same situation. Thank you for the opportunity to testify, and I would be pleased to respond to any questions.
Thank you, Mr. Dunlow. Much appreciate your testimony, and and just kind of laying it out there, the implications. Votes were called at 10:22. We are going to recess the committee at this point. My apologies to the witnesses. That constitutional responsibility to vote kind of gets in the way of really good work. We will be back. Ask everybody after there are 4 votes, and after the 4th vote, we just ask everybody to come back because we will resume promptly after the 4th vote. The first vote is 15 minutes. The remaining 3 are 5-minute votes. So the committee is in recess. Appreciate everybody's patience with that interruption for votes. We will reconvene the committee here. And Mr. Hotchkiss, please begin with your testimony when you're ready.
Chairman Thompson, Ranking Member Scott, and members of the committee, my name is Tony Hotchkiss, and I want to thank you for the opportunity to speak today. I am the chairman of the American Bankers Association Agricultural and Rural Bankers Committee, and I'm testifying in that capacity today. I have 41 years of agricultural banking experience, the last 10 as Director of Agriculture for Regions Bank, from which I recently retired. Before Regions, I worked in a number of community banks helping to lead their ag lending. I was raised in Iowa, and like many ag bankers across this country, I grew up watching, learning, and working for family and friends who were farmers and ranchers. Ag bankers have a deep appreciation for the important role producers play in our economy and the unique challenges they face. I appreciate the opportunity today to present the views of the American Bankers Association on financial conditions in farm country. Banks continue to be one of the first places that farmers and ranchers turn when looking for agricultural loans. Our agricultural credit portfolio is very diverse. Banks finance large farms, small farms, urban farmers, beginning farmers, women farmers, minority farmers. To bankers, agricultural lending is good business, and we make credit available to all who can demonstrate they have a sound business plan and the ability to repay. With our deep connection to farmers and ranchers, banks are often the first to see changes within balance sheets and cash flows on the farm operation, often due to changing economic conditions. Today, I'd like to outline the current state of the agricultural economy as it relates to our customers and opportunities in which Congress could offer solutions which would reduce stress on all borrowers and lenders. With rising input costs and lower commodity prices, farmers and ranchers have worked through the liquidity and working capital they built up over the past few years at a more rapid pace than anticipated and are now beginning to leverage equity through refinancing debt. This has made agricultural bankers feel like they are looking over the cliff in regards to the agricultural economy. For example, we are hearing that bankers already are starting to refinance debt for almond growers in California, and we are hopeful this is an outlier and not a growing trend. The challenge with refinancing is that with low commodity prices, the cash flow is challenged to even meet the new payment requirements of the refinanced debt. As has already been mentioned, the USDA is projecting net farm income to drop approximately 25% from 2023 to 2024. Some regions of the country will feel the effects sooner than others, but all will feel it. Based on this, the trend of refinancing debt may become more commonplace and more challenging as lenders and producers work together to bridge the low prices we're experiencing in ag commodities. Changes are needed to government policy to combat a slowing agricultural economy. The 2024 Farm Bill provides many of the needed changes. An increase in the FSA guaranteed loan limits is very good. Improvements to the down payment assistance program is very good. And the revised definitions for who qualifies for beginning farmer and rancher programs is also good, and were all ABA priorities that were included in the 2024 Farm Bill. Additionally, changes to reference prices, dairy programs, crop insurance, and Farmer Mac are all supported by agricultural bankers. I would like to thank this committee for the tireless work they put in to pass the bipartisan legislation out of this committee. Agricultural bankers do believe there are some additional Farm Bill provisions that could be added in the future. This includes the creation of a national process for FSA guaranteed loan programs to speed up the loan-making process, and also opening Farmer Mac up by removing the cooperative lender requirement for energy project loans. Beyond the 2024 Farm Bill, there are many provisions within tax reform that are vitally important to agriculture banks and their customers, such as carrying on the current estate tax exemptions and capital gains exemptions for agriculture. The Access to Credit for Our Rural Economy Act, better known as ACRE Act, is tax legislation that would create a level playing field for all lenders to agriculture. ABA analysis has shown that the ACRE Act would result in a 50 to 100 basis point reduction in interest rates for qualified borrowers. Farm banks are healthy and continue to be forward-looking, growing capital and increasing reserves. Bankers are proud to Proud of the work we do to support our nation's farmers and ranchers, the ag community is a critical part of our economy, and America's banks remain committed to serve it through good times and bad. Thank you very much for this opportunity. I'd be happy to answer any questions you may have.
Mr. Hotchkiss, thank you so much for your testimony. Now, Mr. Caldwell, please proceed when you're ready.
Chairman Thompson, Ranking Member Scott, and members of the House Agricultural Committee, thank you for the opportunity to testify regarding the financial conditions in farm country and their impacts on rural economics. My name is Joey Caldwell. I am the Senior Vice President at Greenpoint Ag. We are a farmer-owned agricultural input supplier serving farmers in rural communities in the southern U.S. Basically, we supply farmers what they need to grow crops that feed, clothe, and fuel our nation and beyond. We supply crop nutrition, seed, and crop protection products. We also provide a variety of services from agronomic and precision technology advice to application services. We do this in conjunction with our farm cooperative partners at Alabama Farmers Co-op and Tennessee Farmers Co-op. I lead our retail division that has over 85 locations across 10 states. Basically, if the SEC plays football there, we're likely there too. I also appear before you today on behalf of the Agricultural Retailers Association Board of Directors, and as the son of a proud West Tennessee farmer, this year will be my dad's 62nd crop. When I graduated college in the early 1980s, the farm economy was so bad it could barely support my dad, mother, 3 brothers, and me. However, this led me to a fulfilling career in supporting the American farmer. At Greenpoint, we're in the farmer success business. We know that if the farmer isn't successful, the ag supply chain will not be successful. We believe that strong farmers make strong families. Those strong families make for strong rural communities, and it is those communities that help make the fabric of this great nation. While farmers are a fiercely resilient and independent bunch, it takes a whole lot of people working together to get them what they need, including all y'all. Farmers need a strong farm bill. Most importantly, they rely on the certainty crop insurance and price support helps provide. I know that many of you know this. I know many of you care deeply about rural America. I know there are a lot of pieces that go into legislation of this size, but I also need you to know that what matters to farmers and their communities is the certainty that the Farm Bill brings. Farmers have a critical need for that certainty. Farming isn't like other professions. If I make a mistake in this role, my company may suffer. And if that mistake is bad enough, I could lose my job. That would be hard, but I could start over. Farming is different. When a farmer plants a crop, they put more than just their job at risk. Their farm is their home, their livelihood, and pillar in their community. For many, it is also their family legacy, something passed down to them over the generations that they hope to pass down to their kids. If they make too many mistakes or the markets move against them too badly, they risk losing it all. When I consider financial conditions and the farm economy's impact on rural communities, the first word that continually comes to mind is uncertainty. I look forward to discussing with you today why that certainty continues to hinder progress in our business and how it can be remedied. For starters, a new farm bill helps provide certainty about the risk well beyond the control of the farmer. Weather destroys crops, and we all know that the changing weather is increasing those risks. Without this farm bill, the risk may become too great, eventually putting farmers and rural communities where they live in dire straits. We are facing rapidly declining commodity prices and inflation that has driven up the expenses of farm equipment and crop inputs. Farm incomes are off nearly 50% from the last 2 years. The ag economy and the American rural communities helped found this country, and we need help now. I was glad to see this committee pass a bipartisan farm bill and I urge Congress to pass it and help provide more certainty. Thank you for all your work and helping keep the American farmer and our rural communities strong. I look forward to your questions.
Mr. Caldwell, thank you very much for your testimony. Dr. Rainey, please proceed when you're ready.
Chairman Thompson, Ranking Member Scott, and members of the Ag Committee, I thank you for this opportunity to testify on this important process that means so much to our farmers and ranchers and our rural communities. My name is Ron Rainey, and as an agricultural extension economist with the University of Arkansas, I will highlight 3 areas of concern impacting financial conditions in farm country. That's low profit margins, limited crop insurance options, crop insurance understanding and options for some producer segments, and the magnified impacts of the current environment on our small, marginalized, and beginning farmers. Farmers across the country continue to adapt to the challenging agricultural environment made worse by the relatively high input prices, the historically low commodity prices, and the current relatively high interest rates. The current environment has placed increasing pressure on producers' balance sheets, forcing them to increase farm debt levels as they attempt to survive the current economic challenges. Across all ag sectors and types of production, farm profitability remains a challenge. The issue is magnified even more for our small, historically underserved, and marginalized farmers because they have somewhat limited access to many of the farm safety net triggers, either because of a lack of historical production, limited additional financing options, and/or limited access to federal crop insurance. USDA's National Ag Statistics Service releases monthly indexes for input prices paid and output prices received. These indexes include collecting survey responses for output and input prices for agricultural production, crops, livestock, and food commodities. The spread between these 2 indices often helps understand where farmers are getting price squeezed and how their profit margins are impacted. Current farm income instability from inflationary pressures, high interest rates, and several supply chain disruptions are forcing farmers to pay higher input costs while receiving lower commodity prices. In my submitted testimonies, I submitted figures 1 and 2, which is an analysis that compares the annual index value from 2000 to 2024 for 2 indices, crop prices received and input prices paid, with 2011 as the base year, which was a good year. There's a circle in that figure 1 highlighting the beginning of a divergence that began between input-output prices, which started in 2013. Since then, we've seen a major divergence in the 2 indices, with the widest gaps being between 2014 to 2020. From 21 to 2022, we saw both indices increase, but the gap remained, and the divergence has grown even wider in 2023 and 2024 due to declining commodity prices. In response to this profitability squeeze, farmers have been increasing debt levels. A recent article from Kansas City Fed details recent changes in farm debt levels and highlights increased debt levels, especially among small and mid-sized farms. The article details steady increases in farm debt at commercial banks, bolstered by continuing growth in farm operating debt. The solid development in farm operating debt in the first quarter signals an increase in farmers' financing needs. Additionally, many specialty crop producers have limited crop insurance options. The number of federal crop insurance products available for producers has expanded risk mitigating options in recent years. Whole farm revenue, dairy margin, livestock, pasture and forage, to name a few. However, gaps in coverage remain as you examine Risk Management Agency's business summary across all products. Many marginalized producers are only aware of the Non-Insured Crop Disaster Assistance Program, NAP, which is available through USDA's Farm Service Agency. Additional training is needed to improve farmer and rancher understanding and use of these products. Lastly, just want to highlight USDA program historical equity issues and access issues have played a role in limiting the opportunity for many of our small, specialty crop, socially disadvantaged farmers to gain economies of scale, increasing their farm size and investing in innovative or new machinery and or technology. The lack of opportunity to scale up and invest results in lower productivity and relatively higher input costs on average. This results in even tighter profit margins in this current profit-squeezing environment. Additionally, many of our new and beginning farmers are seeking innovative business models to grow their businesses that leverage new technologies to grow their farm businesses using new processes, engaging in such things as urban agriculture, value-added processing and production, and local and regional food systems. Therefore, I encourage you to look across the spectrum of farm businesses and business models to explore opportunities to support other historically underserved sectors who are facing these same tight profit margins. Thank you.
Thank you, Dr. Rainey, and thank you to all of our witnesses for your important testimony today. At this time, members will be recognized for questions in order of seniority, alternating between the majority and minority members, and in order of arrival for those who joined after the hearing convened. You'll be recognized for 5 minutes each in order to allow us to get to as many questions as possible. I now recognize myself for 5 minutes. As many of you know, there are outside voices and even some members of this committee who have tried to stoke a regional battle over the Farm Food and National Security Act. This analysis relies upon isolated comparisons of only reference prices to say the bill favors southern commodities while ignoring other provisions such as enhancements to ARC, the addition of base acres, or the affordability of crop insurance, all of which overwhelmingly benefit Midwest producers. Not to mention policies outside of our jurisdiction such as tax credits and biofuels mandates, which primarily accrue benefits to certain commodities over others. For those of us that were around in 2014, no one benefits when commodity groups start fighting one another, and the committee tried to carefully weigh all of these factors rather than cherry-picking certain provisions. So, for the producer witnesses, Dr. Alan Tully and Mr. Dunlow, when you assess the cost of production for commodities on your farm and the suite of federal policies, Farm Bill related and otherwise, how do you assess the various provisions of the bill this committee advanced in May, and how do the improvements compare to the current law and the alternative proposed by Chairwoman Stabenow? So we'll start with Dr. Alan Tully.
Thank you, Chairman Thompson. Minnesota Corn strongly supports the House-passed Farm Bill, and there's a lot of components within the Farm Bill that, or the House Committee passed. We would find that the increase in reference price for corn, the increase of 40 cents, would be a meaningful increase. We asked for more, but we understand that there are other things that need to be weighed. We also are very grateful for the improvements in the crop insurance title, as well as doubling the funding for MAP and FND. There was investments made in the research title as well, and access to voluntary incentive-based conservation. So we are very happy with the bill that you passed out, and understand that will provide a meaningful improvement in our safety net.
Well, thank you very much. Mr. Dunlow?
Yes, sir, thank you. As I mentioned earlier, just the cost of production and where we're at with the 2018 Farm Bill, it's just not working, not giving us any support. The provisions in the new Farm Bill certainly meet a lot of our needs, but keeping in mind the new provisions in the new Farm Bill still does not guarantee us a profit. That's not what it's there for. Referring back to my 40-year career, the Farm Bill safety net has always been there. When things get bad, it catches you, lets you weather the storm, sort of speaking. But the way things are set up now, the way the Farm Bill is working, is we're facing a Category 5 hurricane. It's just not helping any at all. So the new provision, new Farm Bill, will be very beneficial to us. Thank you.
Either of you two have any insight in terms of comparison with the ideas that have been put forward in the Senate for comparison?
Not 100% familiar with that version, but I do know it doesn't meet in as many of our needs as we're asking for, and reference price for one is still low enough to where we have, even if that was implemented, we'd have massive losses still under that provision.
Dr. Alan Tully, any?
Yeah, we believe that all commodities are in the same boat, and our cost of production have all went up since 2018. And so a reference price increase for all commodities is important, and agriculture sticking together, I think, is critical to us moving the Farm Bill forward.
Yeah, Title I has been really, I mean, to go back to 2002, since the last investment, and the erosion that has occurred, and somewhat on purpose with previous farm bills between 2002 and now, where there was really a significant amount of money taken away from that safety net and put into conservation, put into nutrition. But quite frankly, we're not going to have nutrition if we don't have farmers. So thank you very much, and I now recognize the ranking member for 5 minutes of questions.
Yes, thank you, Chairman. Mr. Alan Tully, let me ask you, I'm very concerned, as you heard from my opening statement, about the CCC remaining and being helpful to our farmers. It has done magnificent work. So tell me, did you or farmers in your area receive payments from the administration during the Trump trade war?
Ranking Member Scott, yes, I think the vast majority of farmers across the country received payments through the CCC.
How did those CC payments impact your ability to move forward?
At the time, they were critical to us moving forward. I would say that we would appreciate a strong safety net, or a stronger safety net, and so then the possibility of not having to go into the CCC would be more desirable, because it would just give us more certainty. So at this point, we're very hopeful that we'll pass a stronger safety net so that we have that certainty.
Yeah, it is my hope that our Farm Bill will take all of this into consideration and show the great value of the CCC program remaining within the hands of whomever is the Secretary of Agriculture. That's what does it. Now, Dr. Rainey, the 2024 Equity Commission final report shared that previous attempts to strengthen the safety net did not directly translate to addressing disparity among producers. So will you tell us more about this disconnect?
Yeah, so in terms of the previous response to questions of the reference prices, I think that there's needed, but if there's also provisions that talk about updating base acres. But if you don't have base acres, then changing reference prices has no impact of the safety net for you. There are many farmers that are outside of the safety net, and when you look at federal crop insurance options, there's many farmers not actively engaged in that for a number of reasons, but some of it is an understanding gap. So on the Equity Commission, we just talked about trying to remove some of those hurdles, to communicate transparently, to allow all segments of agriculture to be seen, and to see programs that they can recognize and employ into their business plans.
And how has this impacted, say, beginning farmers? There are women-owned farms. There are all kinds of people, and with certain considerations. How does it impact the vast diversity of ownership of farms?
Yeah, I would echo that agriculture is extremely important to our rural communities, but it's important to our urban communities as well. We see food insecurity across the country. And what COVID taught us in many ways is that our farming communities are a source of resiliency for making communities and areas food secure. Even sometimes replacing some of our large-scale commercial commodity systems that are in place, going from the small farmers that are doing direct marketing at farmers markets or using the local regional food systems. So the way it plays is that across the spectrum of businesses that make up agriculture, a lot of the farming groups that aren't able to actively access programs to be thriving, become efficient, it creates an added hurdle. One of the advances as an economist is to look at all the technological innovations. We have things like high tunnels, hoop houses, container nurseries, where they're changing it that you don't need 1,000 acres to be productive and profitable. But you do need a nice system, and you need people that understand and willing to finance those systems. So what happens is when they don't get access at USDA, that makes it an added hurdle for financing. It makes it added additional hurdles for trying to help explain maybe a new model that's not a traditional way of looking at it or a traditional way of marketing. And so it just makes it a much more difficult path to walk for all of our producers. And there's some avenues that I think that this committee can address to help smooth that pathway.
Well, thank you for that, and thank you for the 20 seconds extra. Appreciate it.
All right, we'll go to the member from Georgia, Austin Scott.
Thank you, Mr. Chairman. And I want to just kind of reiterate that agriculture is the #1 industry in the majority of states in this country. And even if you're not a farmer, agriculture is important to the economy of your state. And as I look at things right now, the thing that scares me, you've got John Deere, the world's largest seller of tractors and crop harvesters, and this is from an article in June, announced that they were laying off 610 production workers. So even if you're not a farmer, if you're, if you're one of those 610 workers, the reduction in prices for our commodities is having a direct impact on them and their families. The article states lower crop prices are leaving agricultural equipment sellers with an excess of unsold tractors and combines, leading some to offer discounts and suspend new orders. And it also says the Department of Agriculture has also forecast farm income would slide $25.5 billion from 2023. There's been some discussion about the Commodity Credit Corporation. Certainly when ad hoc payments are made, the Commodity Credit Corporation is used. But wouldn't you agree that farmers would rather have a safety net system that isn't dependent on ad hoc payments to get them through the tough years? Would all of you agree that a good safety net system that doesn't require the ad hoc payments is more important than? And then certainly if we get into situations where you do have to have additional money for the CCC, that is something that can be done. And I noticed, Ms. Truly, you talked about the trade deficits. We're already in a trade war with a lot of countries. It's not Trump's trade war. It's a war that's been levied against the citizens of America, and Donald Trump's just the first person to respond to it, to say if you want fair trade, it's going to be fair trade, and that's a two-way street. So I appreciate you bringing up the fact that we have the trade deficits. But I want to go back to you, Mr. Dunlow. You and I both spoke to cotton producers this past week, and the key question that was asked, and again, remember that agriculture is the #1 industry in the majority of the states out there, was asked by a producer to a banker at the event that we both spoke at. And his question was, if farmers have average yields, what percentage of the farmers will you be able to bank next year? Do you remember that question?
Yes, sir.
Do you remember the answer from the banker, the ag
Yes,
lender?
sir. I think she stated that maybe 80% of her current producers with an average crop, she would be able to refinance for another year. which leaves 20% out.
That won't be farming next year.
Absolutely.
And in years gone by, if someone wasn't going to farm, then there was somebody else that was willing to pick up and rent the land. But with the balance sheet changes that we're seeing right now, Mr. Hotchkiss, is it overly optimistic to think that if a farmer isn't able to farm next year, that somebody else is going to step in and rent that property and plant that crop?
Thank you for the question. And I don't know if it's overly optimistic. You're right, there's always been someone that's willing to step up and has been competitive. But with commodity prices where they are and the inability to be able to grow a crop that you could at least break even, it is going to challenge those that might have picked up those acres in the past.
Well, in my state, I mean, it's bankers that are calling me as much as farmers and saying there's not a single commodity that our guys are going to be cash flow positive on. And if you're not cash flow positive, based on input prices and commodity prices, you certainly don't grow your operation or plant. I mean, David, would you expand your operation right now?
Absolutely not. I mean, me and my son have gone through in certain farms that's less productive, you know, because we've been forced to lay people off and maybe get rid of some of the less productive land and a lot of things we're doing just trying to survive.
I'm almost out of time. Let me end with this. Secretary Vilsack was here February 14th. I would hope all of you would watch it. He says specifically, farm income over the 2021 to 2023 period represents the highest level of farm income in the last 50 years. If you listen to Secretary Vilsack, everything's just hunky-dory and rosy on the American farm. But I'm going to tell you something. There's a big disconnect between what's happening in the ag economy and what our current Secretary of Agriculture thinks is actually going on the American farm. Thank you all for being here.
We'll now go to the member from North Carolina, Representative Adams.
Thank you, Mr. Chairman, and to the ranking member for hosting this meeting. To our witnesses, thank you for your testimonies on financial conditions in farm country. And I want to extend some special greetings to our North Carolinian, Dr. Dunlow, on the panel. But before I get to my questions, I do want to raise another financial condition in farm country, which is household food insecurity. It's statistically significantly higher in both rural places and principal cities like Charlotte than the national average, according to USDA's Economic Research Service. And so I share that to provide context for the draft farm bill which passed out of this committee, which many of you have shared today that there are pieces of which you like. But the $30 billion SNAP cut alongside the provisions you highlight today does a disservice to families in farm country who disproportionately participate in the program, who cannot afford to put food on the table. So I'm hopeful that the conversation today can provide or provoke bringing together a farm bill that builds a bigger tent and can support farmers and families who I know are struggling. And Mr. Hotchkiss, my first question is to you. You mentioned that it would be problematic for the farm credit system to be exempt from the CFPB's 1071 rule on demographic reporting requirements. So could you discuss whether commercial banks are prepared to comply with this reporting? And do you think that a farm credit system exemption would disrupt comprehensive data collection that may reveal who is and who is not being served by financial institutions?
Thank you for the question, Representative. First of all, yes, commercial banks are prepared to comply with the 1071 rule. And your question regarding farm credit and the proposed exemption for them, the reason it's problematic is because it continues to keep an unlevel playing field, and I believe, and the ABA believes, it should be a one-size-fits-all. Everyone should be held accountable to track and record and report the same information. And by having that carved out and having a different agency, that just becomes suspect and very problematic.
Thank you. So Dr. Rainey, thank you for your service on USDA's Equity Commission. But when we talk as if the current financial conditions in farm country are recent, we have to remember that for some black and brown farmers, they've been facing headwinds for quite a while. So I just asked Mr. Hotchkiss about the Section 1071 rulemaking and the current bill drafts. So how do you think socially disadvantaged farmers would feel about farm credit system institutions if they knew that the system could be held to a different and potentially weaker standard for demographic reporting?
One of my roles as an educator is working as an advocate, trying to help support more transparent systems. And coming from many of my stakeholders, both in industry and farming from minority segments, they've been pushing to get more transparency there. Because one of the things that's needed in order to drive good results is good data. And if you're limited on the data that you're collecting, that you can identify if there's some systemic issues or there's some problems, then it's hard to address it. So I think that many in the minority communities would love to see that transparency, to see that level playing field play out.
So, Dr. Rainey, this summer I introduced the Capital for Beginning Farmers and Ranchers Act with Representative Strickland of Washington, and it authorizes a pilot loan program for beginning farmers to finance startup expenditures and features multi-year repayment terms up to 10 years, as well as reduce collateral interest. So do you see this as a tool that would benefit under-resourced farmers?
The short answer would be yes. So financial stress is across agriculture, and because of the systemic issues, I'd say that many of our small and marginalized farmers and beginning farmers, it's an added hurdle to even get onto the field, if you wish. So in any programs that would support financing, financing is the fuel that drives agriculture. So any options that can help and assist in that space would be beneficial.
Thank you, and thank you all for your testimony and your answers. And I have some others, but I'll pass them along. And Mr. Chairman, I yield back.
We'll go to the member from Nebraska, Representative Bacon.
Thank you. Thank you all for being here. We appreciate your testimony and your perspective. Dr. Dunlow and Dr. Alan Tully, there have been some members of Congress and even some producers who have suggested that farmers don't need Title I and said insurance is enough to see them through the bad years. Do you agree with this sentiment? And we'll love to hear your thoughts on it.
Oops. Thank you. No, we actually would view it as they're two separate roles. Title I is a price support system to help us in times that provides consistency, but is well below any cost of production or profitability level. Crop insurance is a tool that each producer can choose to enter into based on their yields and their level of comfort related to risk. And so we view them as separate parts of the safety net, but are critical.
Our farmers would be undermined by taking away Title I, bottom line. Mr. Dunlow.
Yes, I reiterate what the lady said. We look at it two different ways, and insurance is, just for example, on my farm, if insurance guarantees if cotton is at 60 cents a pound, then I take insurance, I'm insured at 60 cents a pound, which is still well below the cost of production. But with Title I and reference prices, it gives a safety net, like I previously said, that helps you weather the storm. In addition to that, it also gives my banker a feeling of comfort, 5-year farm bill with, knowing if things gets bad, there's subsidies coming in.
Thank you. Mr. Hotchkiss, your testimony touches on how access to credit can be more difficult for young, beginning, and socially disadvantaged farmers. The bipartisan farm bill this committee passed just a few months ago expands access to the safety net for producers by streamlining credit programs, expanding premium discounts and crop insurance, as well as adding additional base acres. How important will these changes be for those producers who struggle with access to credit?
Thank you for your question. As all young and beginning farmers, as they enter into the farm industry, there's a high cost of entry, and if they don't enter with a family member, they need these programs so that they can take advantage of the programs, whether it's down payment assistance or interest assistance or any other USDA program. And so they're absolutely critical, in my opinion, to allow us to continue to bring in younger farmers, and as I think was said earlier, help the average age of a farmer, I think 62 this year. We like to pull that down because we need our farmers to be here a long time so we can feed the world for a long time.
You need to get the next generation in. Totally agree. And Dr. Alan Tully, one final question back to you, if I may. The draft herbicide strategy proposed by the EPA would force growers to adopt costly and burdensome mitigation measures just to use important tools like glyphosate, dicamba, atrazine to protect their crops from damaging weeds and implement conservation practices. According to the USDA analysis, corn growers in just Iowa, Illinois, and Nebraska could collectively face costs as high as $5.5 billion to comply with this strategy. How do these expensive mandates like these impact corn growers who are already struggling to make ends meet?
So access to any of our crop protection tools are going to play a critical role in us being profitable, as well as employing any climate smart programs. And so that's kind of a double-edged sword. If they increase regulation around the crop protection tools that we have, we may not all be able to participate in some of the crop protection or in some of the climate smart practices that are also becoming clearer and clearer important to our consumers.
Thank you. I have 30 seconds left. I think I'll yield back.
All right, we'll go to Representative Spanberger.
Thank you so much, Mr. Chairman, and thank you to the witnesses for joining us here today. Collapsing on-farm prices, increasing input costs, and tightening margins are straining farmers' financial stability, as you all have so clearly laid out throughout your testimony. In the Commonwealth of Virginia, agriculture is our largest private industry. It contributes significantly to our Commonwealth's rural communities and those communities' overall health, financial health, as well as our overall Commonwealth's economy. The success of family farms translates directly into the well-being of local economies through job creation, local spending, and community stability, and protecting family farms is essential for preserving the agricultural way of life, feeding the American people, and making sure that generations can continue to thrive on that land. One of the potential efforts that I have worked on to address some of the financial challenges with Representative LaMalfa, a colleague on this committee, is the Farm Credit Adjustment Act. This bill, and I just highlighted in this hearing because I continue to hear from constituents about the impact it would have, this bill is directly responsive to the concerns I've heard from farmers across Virginia about administrative burdens placed on farm credit institutions. Specifically, this bill would cut red tape by allowing the Farm Credit Administration to conduct audits of low-risk farm credit institutions less frequently, every 24 months instead of every 18 months. It's common sense. It's just a 6-month extension. It would reduce regulatory burdens, lower costs for farm credit institutions, and make sure, frankly, that they have more bandwidth to serve the needs of farmers. So as we continue to look at ongoing critical issues, way that we're addressing them, I think it's vitally important to continue the conversation related to this bill and the effort that it tries to get at. But I want to begin my questioning talking about some of the challenges facing the farm safety net programs. Currently, the shortcomings of farm safety net programs are increasingly apparent, and again, through your testimony, you've touched on them. With declining direct access from programs like agricultural risk coverage and price loss coverage and increasing reliance on ad hoc disaster aid, improvements truly are needed to better support farmers. So, Mr. Hotchkiss, I'd like to begin with you. Could you discuss about the current state of farm safety programs that have affected agricultural lenders and their ability to support farmers? and if there are any additional changes or improvements that you think that might be needed to make these programs more kind of readily able to support and assist farmers and help stabilize their financial conditions.
Thank you for the question. From a safety net perspective, obviously crop insurance, I believe, is critical. It's part of the Farm Bill. It's critical both for the farmer and benefits them greatly because it allows them to gain access to credit, but it also does give the organization financing them also some comfort because they do have that safety net there. In terms of other issues, the increased limits that are contained for FSA guarantee limits for both, and the separating of the operating loan and real estate loan and increasing them both with the high costs and the continuing increasing costs, they are critical not only for existing farmers, but I believe for young and beginning farmers because it gives them the ability to get guarantees on larger operations because of the cost, or with larger operations because of the cost. And then lastly, the reference prices. You had asked, is there something that I can suggest? Reference prices have historically been set once in a farm bill, and I believe with our economy and our world moving at such a rapid pace, almost an annual setting of those reference prices makes more sense because you avoid getting them out of correlation with what's going on in the market. And I also believe that having a correlation to the cost to produce versus the market is really important because there isn't always a strong correlation between that cost to produce and the market price versus what a reference price could do from a safety net perspective. And as has been said by some of my esteemed colleagues here, it's important that I believe it's important that farmers can at least break even.
Can you just, and in my remaining time, I understand what you're saying. Could you just expand on that a little bit more in terms of what that shift would be that you'd recommend?
Expand on what specifically?
When you were talking about how, two parts. Well, now I'm running out of time. But specifically the annual readjustment that you're...
Well,
would that just not be also highly disruptive?
If the reference price could be tied to costs, not commodity market prices, and then either have an annual adjustment tied to those costs or just be reset by the USDA on an annual basis. It could be either one.
Okay, thank you. That's helpful and interesting. I yield back.
All right, we will go to my neighbor from South Dakota, Representative Johnson.
Howdy, neighbor. I wanted to talk banking a little bit, and of course, 1071 is the CFPB's, as you know, sir, their new set of regulations for lenders. A pretty broad new data collection. I just want to get a sense, because clearly capital, as we're talking about people expanding operations, having efficient operations, being able to be sustainable, particularly for young, beginning farmers, I have to think these new regulations have an impact on your ability to put capital out on the street. So talk a little bit about 1071 specifically, and if there are other regulations that complicate that flow of capital.
Is that directed at me? Okay, I'm sorry. Thank you for the question. Complying with 1071 obviously will increase the costs to produce, and those costs will be passed on to the producer. I mean, that's going to happen, and unfortunately, we don't need additional costs today because we have enough that are already being passed on. The bigger concern I have with 1071 is privacy. In rural America, everyone knows everybody. Your neighbor just said that, and so depending upon how things could be reported to the public, there could be a whole community that know who it's being talked about, and they may not want that information, out in the public. And to me, it's an invasion of their privacy, their businesses or farms' privacy. And so to me, I'm as concerned about that as I am about the cost.
Well, and so you're right. So much of this information is already known. It is even more problematic for the information maybe that the lender doesn't know if the person who's seeking this loan is being asked questions that they think are invasive or inappropriate. Now you're kind of putting a wedge between this incredibly important relationship between a producer and where they go to get the capital they need to be successful. Am I right in thinking that way?
Absolutely, which is also why if if we do continue to move forward, it should be a level playing field, and everyone that finances in agriculture should be required to ask the same questions. Because if that doesn't happen, those that don't have to ask those questions are going to have an advantage, because that's where the customers are going to go, because they don't want to answer them.
And I don't want to be blind to history here. I mean, clearly there have been times where capital has not flown to all communities in this country like it should have. But I get concerned when we divide this country into smaller and smaller, more narrow demographic buckets and view us not just as producers who are trying to feed the world, clothe the world, power the American economy, but as subsets of identity groups. And I'm just concerned that all this data collection is moving us in the wrong direction. What about other regulatory overreach that this committee should be attentive to?
Well, nothing comes to mind specifically. I know that there is some proposals regarding Basel III, and that will continue to increase costs. I mean, it's the same type of thing, more cost that will be passed on, and I think that will hurt the American farmer.
Well, and that was the one I was sort of fishing for. I should have directed you a little bit better rather than make you. But you listen. You grabbed onto it delightfully. I do think this committee's talked a lot about how those new margin standards could make it a lot harder to deploy capital efficiently and effectively, not just for rural America, but really across this country. I think the prudential regulators need to seriously consider the secondary and tertiary impacts of some of these new much higher margin requirements, which frankly go way beyond what the stress testing indicates would be reasonable and appropriate in the marketplace. Anything else you want to share before I yield back?
I would agree with that comment. That is all I would say.
Well, look at this. What a neighborly amount of agreement we have today, Mr. Chairman.
And I'm your neighbor to the south from Iowa, so hi, neighbor.
Yeah, I think both of you guys need to do a better job of taking care of your yard. The neighborhood's going to hell. So with that, I yield back.
I'm just amazed that you gave this country 44 seconds back, so thank you. We'll go to the member from Connecticut, Representative Hayes.
Good afternoon, and thank you to all of our witnesses for being here today. Before I start my comments, and since the hearing opened talking about the Farm Food and National Security Act, I'll just make a comment that the fact that we voted on that 2 months ago out of committee and it has not gone to the floor yet is an indication of how problematic that piece of legislation is. We have 4 more weeks in session before the funding runs out from the extension, so hopefully we can continue to work until we come to agreement and pass a bill out of the full House that the Senate can consider, because everyone on this committee and here in the Congress wants a farm bill that supports our farmers and feeds our families. That is something that I think we all want. But back to today's hearing. According to the 2022 Census of Agriculture, Connecticut, where I'm from, in my district, the 5th district, has about 1,251 farms, a decrease from the 2017 census, which counted about 1,404 farms. The average size of a farm in my district is about 72 acres, more than 6 times smaller than the national average. This trend holds across the country. The number of farms is declining, and only the largest are surviving. This committee and the Congress as a whole must work to preserve farms and grow American agriculture, not stand by while more operations close their doors and go out of business. There are inherent risks in farming. I think we can all agree on that. And the success of a farm is dependent on national and international trends, increasingly extreme and unpredictable climate conditions, and shifting priorities in federal support. The farm safety net is crucial to farmers facing uncertainty, but its reach is also limited, as we well know. In 2022, only 19% of farms in the United States had crop insurance. In Connecticut, just 5% of those farms had crop insurance. Dr. Rainey, I appreciate the attention paid to crop insurance in your testimony, specifically the lack of options available to small farms and minority, underserved, and specialty crop producers. In your work, what have you identified as the main barriers to access to crop insurance for small farms?
Appreciate that question. So I'm currently under a risk management agency pilot project across the South, where we're actually trying to address that question and are collecting data actively right now, trying to, understand just the basic awareness of federal crop insurance. One of the things that we found out through that program where we have a cohort of program specialists talking to farmers and ranchers, and I'll preface it by saying we're focusing on socially disadvantaged, marginalized farmers, small farmers, is asking them, are they familiar with what the federal crop insurance products are? Many of them are not. The reason I mentioned that in my testimony about NAP is because NAP is more disaster than it is crop insurance. And so from a fundamental risk management perspective, many of our small and minority farmers don't even understand the value of how they can transfer and manage risk using federal crop insurance. In terms of identifying issues, we've just found there's a lack of engagement in many places. Some of it, I think, is the incentives of the structure. So commissions are based on, you can make a lot more commissions if you're focused in on large-scale commodity farmers. And from what I understand, I'm not a crop insurance expert, but the work and administrative workload of managing those or carrying out those policies for micro farm and whole farm is a little bit higher. So many agents will shy away from that, or maybe their book of business is fine that they say I'm good for the year without trying to do that added program chasing clients. But the bottom line is many of our farmers and ranchers are outside of that safety net if you're looking at crop insurance as a potential net catcher, if you will.
Thank you. The USDA has consistently found that smaller farms are at higher financial risk. However, on this committee and most of our work historically has ignored the needs of those really small farms that we're talking about, farms like mine in New England. Over the past 2 years, New England farmers have experienced extreme weather events, from droughts to late season frost to torrential rains. Last month, I introduced a piece of legislation called Save Our Small Farms, with the rest of the Connecticut delegation, which would improve access to and payouts from NAP, assist and incentivize farmers to purchase a whole farm revenue protection policy, and direct the USDA to study the feasibility of an index-based insurance policy for extreme weather events. Would you agree that expanding access to NAP and crop insurance coverage would help small farmers stay in business?
Absolutely. And what we've discovered is that there's a knowledge gap there. Many of those farmers don't understand federal crop insurance, and many of them think that it is only for the large-scale farmers. There's been some new products, but that information has not made it for those businesses to consider. So, yes, I think it can help.
Thank you. My time has expired, and a focus on technical assistance is another top priority for me in my work on this committee. I'm sorry for going over, Mr. Chair. I yield back.
All right, we'll go to Chairman Lucas from Oklahoma.
Thank you, Mr. Chairman. When I had the privilege, honor, and responsibility of being chairman of the Ag Committee in 2014, this committee created the ARC and PLC programs and set the reference prices that producers are operating under today. Input costs have risen significantly since 2014, and reference prices are not accurately reflecting the cost of production today. Additionally, farm income is forecast to fall for the second consecutive year, and optimism in my part of the country is declining. So let me be clear. The time to make updates to the farm safety net is now, and I want to thank Chairman Thompson for producing a strong farm bill that includes significant upgrades to reference prices across commodities. Now, I want to begin my questions today by examining the effects of rising input costs on producers. Mr. Dunlow, you mentioned in your written testimony that the cost of production for cotton has increased by 24% since 2018, and growers are struggling to make ends meet. Can you please walk us through the different factors that have made growing cotton more expensive since 2018? And additionally, will you touch on the real-world impacts of what have happened to producers, what will happen to producers if Congress does not pass a farm bill this year?
Yes, thank you. And like I said, on our farm, practically every input has gone up. It's labor, it's fuels, equipment, land rent, all inputs. And historically, in my 40-year career, those do not come down. Labor's, equipment price, certainly farm rent. It does not, those figures doesn't come down. Occasionally, fertilizers will come down a little bit, but they have gone up as much as 200% back during COVID. And it's come back down a little bit, but still significantly higher than it was in 18. So these are the problems we're facing with commodity prices still staying at the same level and not kicking in the reference price safety net part.
We've touched on the importance of a strong farm safety net that includes programs like ARC, PLC, and crop insurance. This question's for the panel. Can you discuss how crop insurance complements programs like ARC, ARC, and PLC? Why is it important that the producers have access to both price protection and weather protection? And whoever would care to step up and take a swing.
I can't work.
We're going to get you there. Pull it a little closer, please, if you can.
Maybe I'll just yell. Okay. Yeah, I think that, the ARC and PLC program really provides a great safety net, but I would put it more as a put option. That would be the lowest point in which we would be subject to. But I wouldn't farm without insurance any more than I would have a house without having homeowners insurance. If a hailstorm comes through, I want my homeowner's insurance to be there to protect me, just like I want my crop insurance to be there to protect me if the same thing happens. And so it provides the flexibility for producers to engage in an insurance program that fits their needs and fits their level of risk.
Anyone else care to touch on that? I think that a good point has been made. It doesn't matter if you have price protection if you have nothing to sell, which is what crop insurance is about. By the same token, if you have a bountiful crop and there's no price, you're in the same box. All of you have experienced significant market volatility in recent years. So as we move towards the end of this year, what economic headwinds are you bracing for, and how will a Farm Bill help mitigate those challenges? And let's start with you, Dr. Alan Tully. You got the last good one. You get to finish out with me.
So I think that for us, as we look forward into the end of the year, we're not sure how our crop is going to be. We've had some record rainfalls in Minnesota, and we also have, downward pressure, headwind pressure on prices. So we're critically evaluating whatever capital purchases or investments that we may be interested in making and holding off for another year before we do anything more significant.
So you've got to have a complete safety net, and it's got to be updated if
We need
people
to
are going
have
to
a
survive.
complete, absolutely.
With
Thank
that, I
you.
yield back, Mr. Chairman.
All right, we'll go to the weatherman from Illinois, Representative Sorensen.
Thank you, Mr. Chairman, and thank you, Dr. Tully, for mentioning that Minnesota has seen so much rain, and we have seen the water levels rise in the Mississippi River Valley. Our farmers are dealing with that right now. But also the issue that we're seeing now is our focus as the waters recede in these farm fields. Now we're looking toward increasing likelihood of heat. So effective measures against extreme weather events like this are vital to ensure that our producers can navigate the fluctuations that we're seeing in our weather. Financial tools like reference prices and crop insurance are integral to helping farmers keep food on the table and grow the energy that we need for uncertainty in economic times. These safeguards must remain robust and crafted in a way that benefits all producers fairly. The Farm Bill right now is a critical risk management tool for the heartland. And that is why it is imperative to ensure that the final text has broad bipartisan support and is financially sound. I will work toward that end because it not only helps our family farmers endure the hard times today, but it keeps them sustainable for generations to come. And so I want to turn to Dr. Rainey first. As the only meteorologist in this committee or in Congress, we see these extreme weather events happening more frequently. When we look at this, the rate and frequency of these events makes the past no longer the prologue when determining the future risks to producers. These impacts affect productivity globally, contributing to an already volatile commodity market. What enhancements to existing risk management tools in the Farm Bill do you believe will prepare farming communities to survive future challenges?
I think that crop insurance is definitely, as my fellow panel members have stated, crop insurance is an important part of that. To understand those that aren't currently being served by federal crop insurance, I think it's important to look for ways to try to expand that, whether that's through technical assistance to help the broader farmers and ranchers understand that risk mitigating factor. Because if they don't have crop insurance, and if they're outside of the safety net, then they're financing their risk on their balance sheets. And that's a place that we really need more of our businesses to truly understand that. So I think crop insurance and adjustments to expanding that, looking at possibly subsidy levels, looking at ways of possible technical assistance to enhance understanding and use of it, either from RMA or through education, through the land grant systems. I think those are some avenues that would pay dividends, because I think the more that we can move from ad hoc disaster assistance, the better off the farmers are, the better off the system is. Because what we've all talked about is the risk. And what the Farm Bill does is take some of that uncertainty of the risk out, and it gives programs and avenues for farmers to strategically engage. I work a lot with Extension Risk Management, where we talk about the full range of risk management tools, and there are some things that I think we can do in technical assistance there, but when the profit squeeze that we have right now, where input prices are above commodity prices, that's going to require some intervention, and that's just the bottom line. With this current squeeze, unless we can reverse that, it's difficult.
Appreciate that. I did want to talk briefly. The Inflation Reduction Act provides tax credits to promote the production of clean energy. And in my district and the surrounding areas in northern Illinois, sustainable aviation fuel is needed now more than ever. However, how can we let it happen? Brazilian ethanol and used cooking oil from China is coming into our country, and it is allowed to use these tax credits. When our family farmers and our producers have the ability to bring this to fruition, I know my time is waning, but Dr. Alan Tully, I want to turn this to you. How critical is it for the Treasury to craft energy tax credits that prioritize our American farmers and our domestic producers?
The sustainable aviation fuel space is one of the most exciting things that we have coming as a corn farmer. And right now, how the Treasury has their guidance written, it would exclude us. And so it's almost insulting to believe that we would bring in sugarcane ethanol into the U.S. in place of homegrown ethanol grown here.
I appreciate that. I know my time is expiring, but the decisions that we made with respect to ethanol in the 1990s really helped our family farmers.
Gentleman's time has expired.
Sustainable aviation
Chair now
fuel is needed today.
recognizes
Thank
the
you.
gentleman from Indiana, Mr. Baird.
Thank you, Mr. Chairman. Appreciate having this session on financial conditions in farm country, and any of us that are involved in agriculture, you certainly recognize how important the prices are, how important costs are associated with trying to produce a crop. So I think it's very appropriate to have the kind of expertise we have here today, and I really want to thank you for being here. I guess the first thing I'm going to start off with Mr. Hotchkiss. You're from Evansville, Indiana, and you probably know some of the folks at the Indiana Bankers Association, like Amber Van Til and Rex Denton. Anyway, good to have you here.
Thank you.
I was really proud of them when we were going through the PPP and how much contact they had with the local community and their involvement. So it's part of the fabric of our rural communities. So thank you for that. But what I wanted to start out with, you know, during in your testimony, you mentioned the Farm, Food, and National Security Act and those provisions that help meet the financial needs of producers across the country. Can you expand further on how important these changes will be to you and to other bankers in keeping producers' cash flow during these times?
Well, thank you for the question. the importance is being able to have the act continue. One of the items was increasing the guarantee limits. And what that does, costs have come up, entry to the industry is high, as I said earlier, and separating the operating limit from the land limit or the real estate limit is really important, because what it allows the farmers to do is to continue to expand their operation, but it also allows whoever's financing them to leverage those programs and those guarantee programs at a level that makes more sense, that fits the current environment that we're all working within, so that they can't expand and grow. And in terms of other Farm Bill issues, working on the definition and changing who is a beginning farmer was critical, because before there were people that were beginning farmers but didn't meet the definition because of the way it was written. And so, having that done, and the down payment assistance programs is going to help, especially the beginning and young farmers. Those are just three that come to mind, and it's really critical that we have those things in place so that we can meet the needs of not only beginning farmers but all farmers.
Well, thank you very much. Mr. Caldwell, can you elaborate on from a retailer's perspective, the relevance of the farm safety net for affiliated businesses, and how much of an impact do you think the crop insurance will have on your customers?
So as it's been mentioned by the other panelists, the crop insurance program is, it's the best safety net tool that we've got out there. Our businesses are, we're directly connected to the producers. We're in the same communities. Our employee base, a lot of them still fortunately come from the farm. They're embedded in those communities. And in a lot of cases, agriculture is the primary employer in many of these rural communities. So without that safety net, and we talk about the safety net for producers, this safety net is for those communities. Because without them, without their success, then none of the rest of us succeed. So as you live and you work in these rural communities, you see so agriculture goes, so our farmers go, so our communities go.
Thank you. Mr. Chairman, I'd like to just make a comment. I had another question, but I've got enough time to make this comment, I think.
Without objection.
The draft herbicide strategy proposed by the Environmental Protection Agency would force growers to adopt costly, burdensome mitigation measures just to use important tools like glyphosate, dicamba, and atrazine. And so I'm just going to make sure I get this on the record that we're concerned about some of the things in the overreach that EPA has and their use of the Endangered Species Act and all of that. So I wanted to make sure we got that in the comments today. But I thank all of you for being here.
So gentlemen yield, thank you. We now recognize Mr. Soto from Florida.
Thank you, Chairman, so much. Proud to represent the Central Florida area. It's kind of SEC country, so I guess it's pretty close with Gainesville and Tallahassee, although we root for the Knights. And in our area, we have blueberries, strawberries, obviously citrus, cattle, huge commodities. We're proud to have many generations of farmers in Central Florida. And we know that through the Farm Bill, very important to increase the commodity reference prices. That's been discussed a couple times today. We want to make sure that every farmer, including young farmers, have a future and that we have a future food supply. We also know through the IRA, investments in resilience and getting access to water has been something I've seen firsthand in Central Florida that's been really helpful. Mr. Caldwell, you had mentioned, the changing climate and what we're facing in the Southeast with getting hit by hurricanes every year almost. How important would it be to make sure we codify a disaster block grant authority? Right now, if we don't put it in every disaster relief bill, then they're not authorized necessarily. And then we saw in Florida and a couple other states that it was very difficult to get the money out there. So How important is it that we streamline disaster relief for farmers after hurricanes who may not have commodities covered by crop insurance, which is obviously also a good tool?
So obviously, we'd rather have that front line, something you could depend on. So anything that we can do to streamline that and efficiency, and when it happens and the relief is there, it's great. I don't know how many, I don't know how many bankers want to finance on that. That's a challenge. So any consistency we can get with any of those relief tools. I started in this business in 1980. The weather was, I don't know how many in the room remember it, but it was not good. It was not good. And so from there, I'm a weather watcher. It's sort of ingrained if you're in agriculture. It's something that you do. And yeah, those hurricanes or the threat of hurricanes, those are the things that keep you up at night. And we've already started this year in Texas. We've already had some crops that have been, that have been damaged. Hopefully the safety net's there. But anything we can do to improve the consistency of that and the transparency and the reliability is a good day.
One of the main things in the Inflation Reduction Act for agriculture was to help with more resilience. What are some of the different resiliency types of actions that local farmers in the Southeast are taking to try to strengthen them against the weather we're seeing?
So, we can have diversity in crops. We can have we can have all kinds of diversity there, but that doesn't really protect us against the weather, so to speak. Growers, obviously, they do the things that they can, try to get a crop in early. If you can get a crop in early, you can harvest early, but there's not a whole lot they can do to protect themselves against a hurricane.
And then, Mr. Hotchkiss, I know we've heard Secretary Vilsack talk a lot about trying to protect small farmers, and trends in consolidation, larger scale efficiency has been kind of a push in the industry that has kind of pushed away from small farmers. From a lender perspective, how do we keep a balance to encourage more farmers to stay in the business and be able to continue to grow?
Thank you for the question. I think to keep more farmers engaged and in the business and to encourage others to enter the industry, whether they're young farmers or not, we have to have safety nets in place, and we have to have programs in place that help protect them not only from price but also on the cost side. Our reference prices have to be relevant every year so that there's a really high correlation to the actual costs. And then there has to be programs, whether through the USDA or direct, that help provide that safety net, because there are so many uncontrollable risks in this business. And I think, as people think about entering the business and becoming a farmer, they're weighing all of those, and if those safety nets aren't out there, they may and really have been choosing not to enter it.
Thank you, Mr. Hotchkiss. We're seeing in Central Florida, citrus has had a real challenge because of greening, as an example, from changing weather and from pests that we have. And while it's improving, there are a lot of challenges we face in the Southeast. I appreciate your perspective, and I yield back.
The chair now recognizes the member from Iowa, Mr. Finstra.
Thank you, Mr. Chair, and thank you, Ranking Member Scott. Thank you for our witnesses. I represent the second largest ag district in the country. Predominantly corn, soybeans, cattle, hogs, dairy, eggs, turkeys, you name it. We have it all. And I'm very passionate about making sure that we continue to be the breadbasket to the world. The problem is we have a beginning farmer and the next generation of trying to take over, but it's problematic. You think about right now, 9% of our farmers are under the age of 35, where over 40% of them are over the age of 65. So how can we make sure that land and that farm gets passed on to the next generation? We're already seeing corporate companies and foreign lands buying our land, and no longer, the American farmer doesn't have it. So I want to first talk about crop insurance. Mrs. Ellen Tully, I want to talk to you. When you think about crop insurance, especially that beginning farmer, it's like a very significant expense. I mean, it's probably the number one expense besides seed when you have to buy crop insurance. I created a bill that's in the Farm Bill to try to lower that cost. Can you talk a little bit about that, of how important it is to make sure that beginning farmer has incentives so they can operate in an effective manner and to be profitable?
Absolutely. Thank you, Congressman Fenstra, for your work on this legislation, along with Congresswoman Craig. It would seem that the both of you truly have an interest in making sure that we have future farmers that are able to make it into the business. We also very much appreciate that Chairman Thompson included it in the bill. And as a little while ago, I was a beginning farmer. But having tools that are specific to them, the capital requirements to get into farming these days are too significant for someone who's 25 or 30 to be able to go to their banker and take on that debt.
That's right.
And without a strong safety net and without them being able to show that they would at least have a floor under their crop if something happened out of their control is critical.
It's absolutely critical. And you teed it up for me when you think of how it all works together for that beginning farmer, and all of a sudden you need the banker. You need that operational loan, and you got to work with that bank to say, with that loan officer saying, all right, not only I got to pay my land rent or pay land price, I also have to pay for that input. I worked on the ACRE Act, or actually I'm the writer, the author of the ACRE Act. Mr. Hotchkiss, can you talk a little bit about operational loans and what it does if we can lower the interest rate just a little bit for not only the beginning farmer, but also operational loans on farmers?
Yeah, I can. First of all, thank you for the question, and thank you for your work on the ACRE Act, because as you know, the ABA has been very supportive of that. The ACRE Act reduces the interest. First of all, it levels the playing field with all financial competitors within the agricultural industry, so that we're all playing by the same rules, all playing on the same field. But I believe that will make things more competitive. It will force all providers of credit to compete in the same field, and therefore that will lower the cost. And interest cost is a huge item for whether it's a beginning farmer or an existing farmer. And by doing that, you're going to help stabilize, make more credit available, and allow them to finance, or maybe if it's a young and beginning farmer, actually get into the farming sector.
Absolutely.
And so we really appreciate you and all you've done for the ACRE Act, and hope that it moves forward.
Thanks. One other topic I want to talk about, especially in Iowa, we have 60 farmer-owned cooperatives, and I know, Mr. Caldwell, you're very involved in that. 199A, I said on Ways and Means also, 199A has to be extended, 20% pass-through for co-ops, cooperatives. What does this mean, and why is this so important? Can you just address this very, very briefly? You got 30 seconds?
I can. I've spent my whole career in the cooperative system, the reverse ownership model, and what 199A actually it just gives the cooperative system a level playing field. And I can just tell you, if we remove that, that will be a direct cost to the member
catastrophic.
owners.
Massive problem. Absolutely.
So
I'm very passionate about it. I've created the bill to make it permanent, but I'll do it through reconciliation next year. Thank you very much, and I yield back.
Thank you. The chair now recognizes the gentle lady from Ohio, Ms. Brown.
Thank you very much, Mr. Chairman. And thank you to our panelists as well. Your comments have been very insightful. As this committee continues our work on this year's Farm Bill, we must remain committed to ensuring our hardworking farmers have the resources and strong safety net they need to thrive. In my home state of Ohio, agriculture was responsible for contributing over $15 million to the 2022 economy. The strength and resilience of our agriculture supply chain and economy have a direct influence on our national security, economic success, and Americans' access to nutritious foods. And I want to emphasize the significance of ensuring that this Farm Bill works for everyone, and importantly, that it brings more farmers into the fold. A farm economy where the rich and big keep getting richer and bigger is not sustainable or successful. Our great existing programs like crop insurance must intentionally include new, young, and socially disadvantaged farmers, as well as those working in non-traditional spaces like urban agriculture. Our strength is rooted in our diversity, and now is the time to invest in that. So, Dr. Rainey, you shared that you served as part of the USDA's Equity Commission. What recommendations did the commission share that would impact minority and socially disadvantaged farmers, and did you see those changes reflected in the House Farm Bill?
We saw a number of the recommendations addressed in terms of trying to expand the safety net, in terms of the reference to trying to update base acres, trying to get more people to be able to benefit from that safety net process. One of the things we were trying to do is we were trying to very broadly serve all of agriculture as we lifted up the systems and the programs. And what we was focused on was trying to give recommendations that there was more intentionality to make sure that the historically underserved had a seat at the table, that they could get access. In terms of how the programs were administered, and in some ways how those programs were written out. We also asked to see the data on the participation so that we could actually see where there was progress being made in terms of application rates and acceptance rates, to try to see if we could get to that data to actually show the data of how the farmers that were coming in the USDA offices were being served. It's an ongoing process. I think many of the recommendations are still being worked on. We get briefings, and I can't give you the line item by line item. I think that progress is being made, but I think there's work that still needs to be done, and I think this committee can step in to support some of those efforts.
Thank you. And Dr. Rainey, can you share what the impacts of bolstering programs focusing on new and socially disadvantaged farmers would be on our farm economy?
Absolutely. I think that agriculture is a very important sector to our country. We talked about the national security issues, but in many parts of our country, agriculture drives those rural economies, and when those farmers suffer, those economies suffer. And we see that in many high poverty areas across the country that have been long-standing because agriculture is not equitably thrived. I think that some of the programs that help our farmers, our beginning farmers, we talked about the cost of entry. So anything that we can do to help with financing, special programs to help those farmers get some kind of a helping hand as they start to move up, as they build into a high cost of entry sector. Mm-hmm. And with the recognition that there's different models out there, because sometimes there's a struggle with those farmers getting financing because they're not the traditional row crop farmer or rancher. They're coming with a different innovative model, and sometimes there's a lack of understanding or appreciation of how that cash flows, even understanding how to get those financials on it. So some expanded efforts in that space I think will be beneficial, because one of the things we talk about, and you talk about profitability, so the youngsters, even family members of many farmers, the farmers that I work with, many of them are leaving agriculture. So if we want that next generation to stay engaged, I think we have to give them some profitable options, because oftentimes they're handling a lot of money, but they're not being profitable.
Thank you. And as ranking member of the Subcommittee on General Farm Commodities, Risk Management, and Credit, I've heard firsthand about how strong upfront investments in farm safety net and risk management programs provide peace of mind and certainty for our farmers and ranchers. So I only have a few seconds, but to any member of our panel, what are the key benefits of crop insurance for the farm economy, and how does it help mitigate risk to ensure financial stability for farmers, if I might get a response from one?
The gentlewoman's time has expired. The chair now recognizes the gentleman from Kansas, Mr. Mann.
Thank the gentleman from Missouri, and appreciate Chairman Thompson hosting today's hearing. Thank you all for being here as we underscore the need for a comprehensive 5-year farm bill. You know, the title of this whole hearing, let's us not forget the financial conditions in farm country. I can tell you, as the congressman from the big first district in Kansas, where we raise a lot of wheat, a lot of sorghum, a lot of corn, a lot of beans, getting to be a lot of cotton. The two words I would use to describe the financial condition of the farm economy is concerning and worsening. And I think we all see that. I think that's coming out here today. About a year ago, Chairman Thompson and I hosted a Farm Bill listening session in the middle of a wheat field, right in the middle of Kansas in my district. We heard from 150 Kansans about their priorities for a farm bill. They were crystal clear that day. We need a farm bill that gives them certainty as they work day in and day out to feed, fuel, and clothe us all. We need a farm bill that addresses record high inflation, risky market volatility, and extreme conditions that we're seeing on farms and ranches in Kansas and in every corner of the country. We need a farm bill that prioritizes farm country and gets input prices back under control. And we need a farm bill that's long enough to provide certainty, yet short enough to adjust and adapt and change with the time, with market conditions, and we need it now. I've often said that my top priority in this farm bill is to protect and strengthen crop insurance. And there'll be those that want to chip away, diminish, weaken it. I think we need to be fortifying it, strengthening it, making it better. In my view, crop insurance is the most successful public-private partnership in the history of the country and is the most cost-effective way to deliver a safe, robust, steady, constant food supply. Incredibly important. A question for you to start with, Mr. Hotchkiss, and thank you for being here. Your voice is really important in these conversations. Please highlight the challenges that you as a lender face when working with producers on ad hoc disaster assistance versus working with producers on more certain programs like crop insurance.
Thank you for the question. The challenge when it's an ad hoc program, like say a hurricane or a derecho, the big buzzword now in weather, and historically, there's been bills passed to provide disaster assistance, but the amount of time it takes to get the money to the end user or to the farmer has just been too long. There are examples that I could share where it's taken up to 2 years in certain parts of the country for that money to get to the producer. And it not only puts them in an extremely tough position, but then they come to their bankers and the bankers are then put in a position to hopefully have assets to leverage, but they're loaning against a revenue source that they aren't really sure how much is coming in. There's a bit of confidence that, okay, I know the legislation passed and there's a bill for so much money to come into to help pay for this disaster, but you don't really know how much is coming to that specific borrower or farmer. And so from my perspective, when you have an ad hoc disaster program, there needs to be timelines set within the legislation that after funding, once it gets to the FSA office, they have so long to start taking apps, so long to process an app, and then so long to write a check. And that time frame needs to be condensed, maybe 4 to 6 months at the outside.
I completely agree. And so as a lender, you don't know how much is coming in.
Yeah, you don't know
when it's coming in.
Exactly.
Other than that, you know everything you need to know, right? I mean, the most important things you don't know. So what do you do?
Versus the other programs, I'll put them all together. You know, if it's crop insurance, you know what that program is and how it's going to pay if this happens.
Yeah.
And so that certainty gives a bank comfort.
Certainty, predictability, incredibly important with all businesses, including our ag producers, who I would argue some of the most sophisticated business people in the entire country, given the risk that they take on and what they do. One more quick question for you, Mr. Caldwell. You know, as a business that relies so heavily on farmers and ranchers, you also have to take steps to manage the risk as margins become tighter for them. Of course, that impacts your business. What are the steps that you take as you're trying to manage risk along with your producers?
So, you know, the one that certainly comes to mind at first, and we talk about, you don't think about maybe that sector being in the finance business, but about a third of our business is probably extended terms, and so with the high interest rates, one thing that happens to us first, we get round one on the cost to carry. Round two, you know, we're trying to figure out how do we cover that increased cost, because we really can't continue to.
Gentleman's time has expired. The chair now recognizes the gentleman from Georgia, Mr. Bishop.
Thank you very much, Mr. Chairman. According to the February 24 farm income forecast, government payments such as the conservation payments, dairy margin coverage, the Farm Bill commodity payments, and the supplemental disaster relief are forecast to fall $10.2 billion in 2024, which is a decrease of 15.9% from 23. The decline is expected largely because of lower supplemental and ad hoc disaster assistance in 24 relative to 23. Of course, government payments always bring up a heated discussion here in Congress within the conversations regarding the Farm Bill. And so I really want to avoid the controversy, but I do have a few questions. Do you believe, and this is directed specifically to the growers, that it's possible in the current state of our farm economy to turn a profit without some form of federal help?
Thank you, and I'd say absolutely not. I mean, we run budgets each year on each different crops, and as I mentioned before, none of the crops show a profit on budgets.
I would agree with Dr. Dunlow, or David Dunlow.
Government subsidies, again, always controversial, but in both of your written testimonies, you potentially suggest that farmers are going to need some kind of economic assistance given the current climate, even if they did not suffer from a natural disaster. This would serve as either a bridge until a successful Farm Bill is implemented or in case a Farm Bill is not enacted. I asked Secretary Vilsack about the potential for a one-time payment back in February when he testified before the Agriculture Subcommittee of Appropriations. Can you confirm whether or not you would suggest that type of assistance? And if so, how should that assistance be designed, allocated, and which commodities should be eligible? And what should the standard be for farmers to qualify?
Absolutely. If a farm bill was passed today, it would go into law in 25, and after the price discovery, if you earned a payment, you would be receiving it in the fall of 26. So he referred to, that's a long time to get some help. And as desperate as it is now on the farm, we need help now. We're on the verge of a tremendous crisis, in my opinion.
And I would say up in Minnesota, we've had record rains this year, which is a stark difference from last year when we had severe drought. So I think right now we're all keeping our eye on how the next 4 weeks go. But certainly with the price reduction on, if corn is around $4 a bushel, maybe just from a price perspective, not in addition to a yield.
Can you perhaps give us some suggestions of how we can convince our colleagues to provide funding for that assistance, given the fact that they seem unwilling to fully fund USDA in the annual appropriations bill, or to provide additional funding to the Ag Committee, or even to bless the chairman's ideas for funding for increased reference prices. Can you give us some hints as to how we can possibly make some additional arguments to try to carry that?
I guess my comment would be we desperately need ad hoc in any form, shape, or fashion that we can get it. It's that desperate on the turn row now. That's the situation we're in, and I truly think at the beginning of next year, if nothing's done, we will be facing a crisis.
I think that the Farm Bill, focuses on farm and nutrition title, but in reality, the Farm Bill is really a rural community bill. And so there's a lot of titles in the Farm Bill that will help support our communities and our auxiliary.
Mr. Haskis?
Yeah, just real briefly, there has been shared concern about not only the age of the farmers, but how do we make it easier for young and beginning farmers to enter this industry? And if you're looking for an argument with your colleagues, If farmers keep losing money, it's going to make it real hard to talk people into coming into this industry.
Gentleman's time has expired. The chair now recognizes the gentlewoman from Illinois, Ms. Miller.
Thank you, Chairman. Thank you all for being here today. I greatly appreciate your insights on the farm economy, and I share your concerns about rising input costs. Okay. Dr. Alan Tully, I was old enough to remember the farm crisis of 1980, and I'm greatly concerned about the situation we're in today. You mentioned in your testimony that the record ag trade deficit, that we have a record ag trade deficit of $32 billion a year. I hear from constituents about their frustration and even fear about this administration's inability to negotiate new trade agreements. How vital to the agriculture industry is it to have a president who can negotiate trade agreements that benefit U.S. farmers?
In the farm bill that was passed out of the House, we greatly appreciate the doubling of the MAP and FMD programs. Trade is critical to any corn grower that we have. So we're the best in the world at growing our commodity, and we want to be able to share that commodity with the rest of the world for food security and safety.
Do you get the impression that our trade policy has been lax or that they've been passive about pursuing new trade agreements?
It would seem that it's not a priority.
Mr. Codwell, in your testimony, you mentioned the negative impacts Biden's climate policies have had on input costs for farmers. Could you please explain how these policies impact your customers and if they have had to change the way they farm because of it?
Yeah, of course, energy's a big part of the input costs from two perspectives. One, we just look at the fuel that gets used not only in their equipment, but also in their power plants to irrigate. And so that's certainly a huge impact. And then the other is the impact on the fertilizer production business. Natural gas is certainly a huge component that contributes to that cost. And those are two of the biggest input costs that most producers would have.
Yes, and it's become painful. Under the Biden administration, we have seen record inflation, rising input costs, and a decrease of American energy production. My fellow farmers are concerned that the Biden supply chain crisis, inflation crisis, and energy crisis threaten the very existence of the family farm. Farm income is decreasing while consumer prices hit record highs. China is taking advantage of us, and we must unleash American energy, including biofuels, to fight back. With all the uncertainty farmers currently face, they need the certainty of a 5-year farm bill. I appreciate our witnesses coming today and to advocate on behalf of production agriculture. Thank you. Thank you, Chairman, and I yield back.
Gentlewoman yields back. The gentlewoman from Texas, Ms. Crockett, is now recognized for 5 minutes.
Thank you so much, Mr. Chairman. And before I begin my official remarks, I'm just curious to know, are any of the witnesses of the opinion that inflation is something that only hit the United States, or is it something that was global? Does anyone know the answer to this strict question? Anybody? Inflation global or limited to United States? No one knows. Interesting. I'll give you the answer. It was global because the pandemic was global. So this is going to be an interesting time. Let me get to my official remarks. I hope we can get some answers on some of these questions. We all agree that a 5-year Farm Bill authorization has a significant impact on the farm economy we are here to talk about today. Unfortunately, in pursuing pointless partisan political pandering policies for the Heritage Foundation types like cruelly cutting SNAP, my Republican colleagues have forestalled any kind of bipartisan deal needed to actually pass a bill in a divided government. Now, we all know that jumping from extension to extension is hurting our farmers and ranchers who aren't able to pay or plan for the future when they don't know what the policy will be. That is why I thought we were all on the same page that we needed to get a bipartisan farm bill reauthorized as soon as possible. Yet over the last few weeks, more and more of my Republican colleagues are suggesting that it wouldn't be so bad if we waited until 2025 to pass a farm bill. Well, I want to nip that talk right in the bud and make sure everyone understands just how devastating that could be for the farm economy and, in fact, the entire economy. You see, my Republican colleagues who think a 2025 farm bill would be worth waiting for think that way because they think a potential Trump administration would be good for the bill. Have any of you ever heard of Project 2025? This isn't a trick question either. And no one has responded. So let me help you. Mr. Chairman, I ask unanimous consent to enter the Heritage Foundation's mandate for leadership, the Conservative Promise, Project 2025, Chapter 10, Department of Agriculture, pages 289 through 318 into the record.
Without objection.
Thank you so much. This action plan, written by Trump's closest advisors, has a whole lot to say about the Farm Bill that I don't think my colleagues on this committee will like. It calls for the elimination of the sugar program, which would destroy what is left of our domestic sugar industry at a time when they are already struggling. These Trump advisors also call to eliminate the Vital Conservation Reserve program, pulling the rug out from farmers and ranchers all across the country. And that is just the tip of the iceberg. I encourage everyone watching this to read what I just entered into the record. Let me try to sum it up in just a couple of words. My question for each member of the panel, in a word, what would be the impact if the next farm bill completely eliminated ARC and PLC payments? If there's anyone that can answer. No one? Okay, so no one knows. Well, I will tell you. The unthinkable, what happened. Trump's advisors in Project 2025 also call for the elimination of these vital programs. What we on the Agriculture Committee know to be a vital support to ensure our farmers and ranchers don't lose their land because of the cyclical nature of production of agriculture, Trump's advisors view as, and I quote, especially egregious examples of what they think needs to be cut. Frankly, if you want to put more farm in the Farm Bill, we need to get a Farm Bill reauthorized and out the gate before these anti-farmer advisors have a chance to be in the White House, depending on how the November election goes. And for those who think that a potential Trump administration wouldn't actually take steps to achieve these policies, let me remind you of something many Americans have forgotten. In the waning days of the Trump administration, December 2020, the President of the United States vetoed the National Defense Authorization Act 2 days before Christmas. Funding for our troops was jeopardized because advisors wanted to show their support for Confederate traitors. In an emboldened potential next Trump administration, it is sadly far too easy to imagine a veto of the Farm Bill that doesn't have these terrible provisions. So to my Republican colleagues gambling on a potential Trump administration, I am asking you to put our farmers and ranchers first. Drop this nonsensical, non-starter snap cut. Come back to the negotiating table and work with the Democrats to get the Farm Bill passed this year. Failing to do so, by far, is the biggest threat to our farm economy. With that, I yield.
Thank you. The gentlewoman yields. The chair now recognizes himself for 5 minutes. Like most of my colleagues here, I recognize that agriculture is the backbone of many of our states' economies and communities. Missouri Ag specifically generates more than $93 billion annually, employing nearly 460,000 persons. We're home to 87,000 farms, the second largest number in the U.S. Yet producers in Missouri and across America are facing rising inflation, growing input prices, decreasing commodity prices, leading to declining farm income. This is why we passed a bipartisan farm bill that supports the farmers who feed, fuel, and clothe the world. In fact, Ms. Crockett and I worked on a very important amendment to the farm bill that ensures that not only fresh fruits and vegetables are included in our SNAP programs, but also frozen fruits and vegetables and canned fruits and vegetables as well, proving that this is a bipartisan effort. My first question is for Mr. Hotchkiss. In your testimony, you point to the importance of a robust farm safety net and highlight the House Farm Bill's enhancements that help producers remain financially viable. In what ways would this committee's passed farm bill help those producers plant another crop this spring?
Well, thank you for the question. First and foremost, the increased guarantee limits will ensure in some cases that farmers have the ability in challenged times to obtain a guaranteed operating loan because the limits have been increased. So that's tremendously important. And secondly, being able to have down payment assistance when needed for different producers, that's part of the Farm Bill, is going to help them make sure that they can plant next year. Maintaining the crop insurance with appropriate reference prices would be a third item that I would mention, because the crop insurance, most banks are asking and requiring as part of a loan deal that a farmer get it, but it just brings assurance and helps manage the risk.
Mr. Dunlow, thank you for being here. Very much appreciate you sharing your challenges that you and your family have faced. Folks who may not be familiar with ag often underestimate the amount of capital that really has to be put in that's put at risk. Can you please paint a picture of how much capital you put at risk year after year and how the impact of even a small change in your profit margin can affect your ability to secure an operating loan? Yes, thank you.
On my particular farm, we have an operating loan, $2.2 million. Along with, this gentleman mentioned, we have a line of credit with our company, input company, of $800,000. So we're investing $3 million annually, and that has to be paid back, every year before you can go back and get another operating loan. And the margins are very, very thin on what we're working on typically on normal conditions. And with the economy now, nothing cash flows, and it's very difficult to get those loans and to move on to the next year.
Are you aware we're losing 1,000 farms a month in America?
Wasn't aware of that figure, but I was aware we're certainly losing.
It's a staggering number when we consider that our food security is our national security. I know we say that a lot in here, but it's not a trite statement. When we're facing potential war against China, the threats from Russia, we've got to maintain our security and our food security. Had one more question here for Mr. Rainey, Dr. Rainey, I'm sorry. For the record, are any safety net programs currently provided by the USDA in any way contingent upon race, ethnicity, gender, political affiliation, or religion?
Not to my knowledge.
Thank you, I appreciate that. The gentle lady from Texas mentioned something about Project 2025 from the Heritage Foundation. I'd just like to submit for the record, President Trump has not adopted the Heritage Foundation 2025 project. He is standing by the officially adopted 20-plank platform of the Republican National Committee. It does not mention sugar subsidies one bit. With that, I yield the balance of my time and recognize the gentle lady from Illinois, Ms. Budzinski.
Thank you, Mr. Chairman, and thank you to the panelists for being here today. I appreciate what each of you have shared in your testimony about the challenges farmers are facing, and much of what has been said are things that I have heard from constituent farmers in my district in central and southern Illinois. Rising land costs and rent is something that is top of mind as we have these conversations. In my district, agricultural land has been valued at over $12,000 an acre. Over 3 times the national average last year. Access to capital is one of the top challenges for young folks to get involved with farming, which is why I introduced the bipartisan Increased Land Access, Security, and Opportunity Act with Congressman Zach Nunn as a first step to addressing this important issue. Beyond that, many of you have highlighted the importance of the farm safety net. In my home state of Illinois, by and far, the most important aspect of the farm safety net is crop insurance. My corn and soybean farmers do not reliably receive Title I payments, so I will continue to be an advocate of a strengthened federal crop insurance program. And one final thing I hear a lot about is the need for expanding market access, whether internationally or domestically. I was very glad to see that our chairman included a doubling of MAP and FMD in his farm bill, for example. And I'm also a major advocate of increasing access to domestic markets. I have two questions. The first is for Dr. Alan Tully. One major market for growers in my district, both corn and soybean growers, is biofuel production. Can you share what your experience has been with market access for ethanol and what, if anything, can be improved?
Well, there is a bill for unleaded 88 or ethanol E15 to be across the country, and we would strongly advocate for that bill to move forward. We believe that it's a homegrown option to have cleaner air right now and also to address some of the climate concerns that consumers have.
Yeah, I very much agree with you around E15 for sure. And I often in my district talk about it as a win-win-win. To your point, lowering carbon emissions, but helping our growers. It's a win-win. So I share that opinion.
Absolutely.
Yeah. Can I ask another question, Mr. Hotchkiss? One thing that many of my growers note is that the price of land and to rent land is the most cost prohibitive part of farming. How do you think Congress can work constructively beyond the ACRE Act with lending organizations to improve outcomes and access for these growers?
Thank you for the question. You're absolutely right. The cost of land and or the cost of rent, whether it's cash rent or some type of equitable crop share rent is getting very, very high. And in addition to the ACRE Act, as you mentioned, which will reduce the cost, the interest cost to borrowers. I don't know that I have any solutions because land is an open market. Obviously, there's a lot of investors, some foreign investors, and I know that's been something discussed, potentially limiting foreign investment would, as all this investment money has come in, and when you get bidders bidding against land and, there's a land that's a lot more than $12,000, as you know, in different states. I think the record I've heard is $30-some thousand. So it just continues to get higher and higher, and it's because of the investment money that's bidding the price up.
I'm going to keep working on that issue. And I guess with that, I'll yield back the balance of my time. Thanks.
Thank you. The gentlewoman yields back. The chair now recognizes the gentleman from Minnesota, Mr. Finstad.
Thank you, and I want to thank Chairman Thompson for holding this important hearing, and thank you for the witnesses for your testimony today. As we've heard today, farm country is facing significant challenges from the weather-related disasters that we've seen firsthand in southern Minnesota with the severe flooding that we've had, to the compounding effects of increased input costs, interest rates, declining commodity prices, decreased net farm income, and trade deficits. To address these challenges, the House Ag Committee has passed a very strong bipartisan farm bill in May, and I'm very proud of the work that the chairman and the committee has done on that. With that said, my first question is for Ms. Alan Tully. Dana, as you know, the Farm Safety Net is the cornerstone of the Farm Bill, and it provides tools for farmers that we need to fuel and feed the world while ensuring that we can pass our farms down to the next generation. Specifically, the countercyclical safety net is intended to protect producers from multi-years of significant downturn, and crop insurance is farmers' #1 risk management tool that we use everything from when we begin our conversations with lenders to our marketing decisions at the back end. So my question is, if we don't pass a 5-year farm bill this year that improves the farm safety net, how do you see that affecting your operation and the operations of your neighbors in southern Minnesota?
Well, given the year that we're faced with and the weather challenges that we've had, as well as, the reduction in commodity prices, I think there's going to be quite a few hard conversations with lenders as we move into next winter and spring. And access to, rental contracts as we're renegotiating rental contracts with our landlords, I think are going to be more difficult, and there may be some really hard decisions around the kitchen table as we move forward.
Yeah, I totally agree. I mean, we're seeing 30 to 40% unmarketed corn and soybeans sitting in bins right now across this country. If I were to sell my corn right now, I'd get about $4 a bushel. Beans are about 11.19, 11.20. It all equals to being upside down pretty severely, and that becomes hard to sustain over year, let alone have the conversation about how do we keep things going in farm country for the next generation to prosper. One of the things I want to talk about here is, again, very proud of Chairman Thompson's work and the committee's work on the farm bill that we were able to pass out of committee. I am a little bit alarmed at, some of the narrative around the support of the framework that the Senate has. And I just want to be crystal clear to anybody that's listening. We have a 900-page farm bill that we kind of put our money where our mouth is, and we showed the American public where this committee stands in a bipartisan way. The Senate right now is a framework. That's essentially taking a napkin and jotting some ideas down and saying, this is what we're going to do. And so for us, I think, again, we've showed our plan. We've showed the bill to our country. And if we look at some of the very serious things that we've talked about in this hearing already and the severe economic challenges that we face in farm country, it's so important that we get together and we get this done. Today our break even for corn is $4.85, and I just said, right now the market's giving you $4.04 a bushel in my hometown. I'm not great at math, but that math does not make sense. That math is not sustainable. When you put the severe trade deficits that we are in right now on top of the climbing input costs that are out of our control, that we have seen just insurmountable pressure from global pressure, from supply chain disruptions to some of the unrest that we've seen, we have felt it in farm country. USDA forecast marketing year averages to be $4.30 and a statutory reference price is at $3.70. Again, the $3.70 reference price is not a break-even price. It's a hold on to our hat, can we make it one more year? And so, you got 50 seconds left, so Dana, just what's your message to those that are unwilling to come to the table or are, still caught into the talking points of some framework versus actually getting to the point where we can get a farm bill done? What's your message?
So the farm bill needs to be done this year. It's a rural community farm bill. It's not just the farm. There's different titles that affect all of us that live in the rural United States, and now's the time before the ball drops coming in the next spring.
Yeah, and I would totally agree. And Mr. Chair, I would just say, this is the farm bill that is for the farmer, written by the farmer, but also it is for our national security. So it's important now that we put the R and the D, rip them off our chest, put the USA back on, and we get a farm bill done. I yield back.
Thank you. The chair now recognizes my good friend from California, Mr. Carbajal.
Thank you, Mr. Chair, and thank you to all the witnesses for being here today. Ms. Ellen Tully, last year, 2 atmospheric storms hit my district on the central coast of California, resulting in billions of dollars in loss of revenue. Farmers and producers in my district continue to feel the pain of natural disasters and the lack of congressional action. Without congressional action, can farmers and growers continue to stay economically viable?
I'm not so sure that all of them can. If we're losing 1,000 farmers a day, it would seem like we need a much stronger safety net in order to be able to have conversations with our bankers.
Ms. Ellen Tully, when Secretary Vilsack was here, we discussed the importance of passing a farm bill and how most USDA disaster programs tend to be oversubscribed due to the increase in natural disasters. Can you elaborate on the consequences our farmers and growers can face should Congress not act in passing a farm bill this year? Just beating that drum a little bit more.
Could you repeat the question?
Can you elaborate on the consequences our farmers and growers can face should Congress not act in passing a farm bill this year?
I think the simple consequence is that we will not have operating loans renewed. There are some at that point where they wouldn't be able to move forward in a 2025 growing season and maybe not pay back their crop, their input costs for 2024.
Thank you. Mr. Dunlow, as you may know, with the recent House Farm Bill that was marked up by this committee, Adjustments were made to eliminate the Secretary's Commodity Credit Corporation's discretionary authority. In the past, this authority has helped protect American farmers during disasters and other emergencies during both Republican and Democrat administrations. In the previous administration, farmers and growers suffered great economic impact due to trade wars. Should another trade war occur in the future, how will the lack of the Secretary's authority play in a role in assisting American farmers during a disaster emergency?
Thank you. I refer back to a good farm bill safety net helps with all of these to some point. And I can give you my experience from the last 40 years. Things get bad, prices go down, the safety net holds you there until things get better.
So was the credit corporation's discretionary authority important?
I think it is important, absolutely. We've seen that Congress has used, or the USDA has used it several times, and it has helped in those times for sure.
Well, we know how slow Congress can move, and without that discretionary authority, I could see the disaster it would have on not being able to act in a nimble fashion to help our farmers. But with that, thank you very much. Mr. Chair, I yield back.
The gentleman yields. Chair now recognizes himself for 5 minutes. I want to thank Chairman Thompson for holding this important hearing, and thanks to each of our witnesses for taking time to be here with us today and share your expertise. Since 2021, high input costs, inflation, and labor shortages and other costs have crippled the agricultural industry and threatened our national security. Compared to 2023, net farm income is forecasted to decrease by almost $40 billion this year, while production expenses are estimated to increase by over $16 billion. The bipartisan farm bill passed out of this committee includes the tools needed to mitigate the financial crisis that is threatening agriculture and rural communities. I thank the chairman for his diligent work on the legislation, and I look forward to working with Republicans and Democrats alike to get this bill across the finish line. Mr. Caldwell, we've had the privilege of knowing each other for a long time, and let's just say your hair color and my hair color were a little different when we first met back a few decades ago. So I'm proud to have someone who considers Tennessee to be their native home testifying before the committee today. In your written testimony, you mentioned the need to fill the agricultural worker shortage with H-2A temporary workers. Can you elaborate on the challenges facing farmers who rely on these temporary workers in light of the overwhelming annual increases in the adverse effect wage rate?
Yeah, I mean, it's a common issue across. I'm working in a 10-state area, but I know it's broader than that. And when we talk to producers, the challenge is for them to be able to find skilled labor locally. It continues. The H-2A program has allowed them to be able to access markets with individuals that are skilled in areas where they need skills. They need drivers, they need equipment operators, and they need general labor. So that has become, I would say, not only an important part of the labor force for them, I would say that it's a critical part of the labor force for them.
Thank you, and that's what I'm hearing from producers in my district back in Tennessee as well. And I'll stick with you, Mr. Caldwell. You also mentioned how regulatory uncertainty can negatively impact producers and retailers. 2 weeks ago, this committee held a hearing highlighting the consequences of the Environmental Protection Agency's recent actions. Disappointingly, but not surprisingly, EPA Administrator Regan in this administration is refusing to communicate with this committee. Can you identify some of the issues caused by gaps in EPA's methodology that you as a retailer deal with and have a domino effect on farmers and finally and ultimately the consumer?
So, I'll go back to the word uncertainty is really the thing that comes to mind more than anything else. We spend a lot of time with growers trying to plan and trying to plan for their cropping plans well in advance. And the uncertainty that comes with some of these regulatory issues where we have, oftentimes we have last minute changes, or we have changes that are really critical to those operations, and in some cases maybe not even substitutes. And then I would say a longer term issue as we start talking about the Endangered Species Act, and what we've seen is some of the first run language and how we're going to implement that in the farm community, and a lot of those are just going to be really unreasonable for producers, and we're talking about in many cases we're talking about products that are really critical for their production. Now, when you're squeezed for cost already, that just adds to that uncertainty.
So I see my time is coming to an end, and so I'll just stay with you, Mr. Caldwell. And we both remember back to the late 70s, early 80s when we were kids, really, and the challenges the farm economy was facing at that time, that farmers, producers were facing. How would you compare the challenge right now to the challenge that farmers faced in the early 80s?
So I would say it feels eerily familiar.
I agree, and I think that it's something that we need to take note of, and thank you again for your time, and I see my time's expired, so I will yield. And next up is Mr. Nunn from Iowa, recognized for 5 minutes.
Thank you, Mr. Chair, and thank you to the committee members who are here today. Thank you for the panel for spending some time with us. I'm from Iowa, second largest ag state in the country. Grateful for your expertise on ag. We lead in pork, we lead in corn, we lead in eggs, we lead in biofuels. And like many of us here, we have a real concern about what's happening to our ag community. Because it's not just the family farm that's impacted by this. It's every rural community, it's every city in America. It is the security of our nation that is impacted by decisions made by members of this committee. For your testimony today, Dr. Alan Tully, I want to begin by saying thank you for sharing your story of how your family's been impacted in Minnesota. It's something that I think Americans across the country are feeling the same. A bushel of corn today in my state runs about $3.96. For perspective, in 2022, that was at $6.54. Now, in order for that to be successful, that's a 60% decrease over the course of just about 24 months. 485 is where it's got to be successful. So farmers are digging in their pocket to be able to plant the crop that feeds and fuels this country at a deficit to themselves. I want to talk about the risk of continued price decline and how that would impact the nation. Specifically, what steps, Doctor, should Congress be taking, noting that the Senate has moved no legislation forward on a farm bill, and this chamber has moved forward a bipartisan piece of the farm bill to plan for the next 5 years for America?
Well, we would hope that the Senate also moves their bill forward with similar safety net that this body has passed out of committee. What the provisions in both the Title I and crop insurance really do work towards making a much stronger safety net than what we have currently. But it may not be soon enough, considering the state at where we're at in July of 2024. So a lot will be determined in terms of yield losses in the next 4 weeks. I'm from Minnesota, but Iowa's faced similar challenges, North Dakota, Illinois, Indiana, South Dakota. And so I think that there may be some significant crop insurance claims that come about both from price and yield.
I would agree with you. It also begins the conversation here on what we're trying to do to help grow the family farm. In my district, 87,000 family farms. Now, in Iowa, the average age of a farmer is 57. Imagine in Minnesota, across the country, that's not too different. In fact, more than 58,000 of those 85,000 farms are run by farmers who are well over 65. It's a salute to their service. It's also an unfair expectation that generation of Americans continues to be the best vanguard we have to feed and fuel the country. It's one of the reasons that I'm proud to work with my colleague on the other side of the aisle here, Nikki Baczynski, who I will note has more soybeans than we do. It's one of the only areas Illinois is beating us. But over this course at hand, we've introduced H.R. 3955, the Increasing Land Access and Securities Opportunity Act, to really make sure that we have a good set of incentives for that next generation of young and beginning farmer to be successful. One, so we can save the family farm, save rural communities, but also to make sure that everybody in big cities has the opportunity to eat and that our country has the ability to maintain energy independence. I want to highlight here that this bill would specifically provide credit for small and beginning farmers. Mr. Hotchkiss, would you agree that these type of policies are not only helpful for our farmers, but essential for our country?
Absolutely. Thank you for the question, and absolutely. We have to come together and help give incentives, help give reasons for people that are younger than our current average age, I'll say it that way, to enter into the farming sector. And we do that through having good, solid safety nets, good programs through USDA, acts like ACRE that I know you're familiar with, ways to help them manage and control costs and manage risks. Because as I said earlier, and I'll say again, if I'm a 25-year-old that has been farming or working on a farm and wanting to start out on my own, and I'm seeing everyone not having safety nets and not making money, I'm not going to be as encouraged to step out and try it on my own as I would if those things existed.
Let alone take out a mortgage that could devastate you and your family for generations. These are the things that are important. I'm glad that this committee has moved a bipartisan bill forward to help young and beginning farmers, to help provide the safety net. I ask that we encourage our colleagues across the rotunda to do the same. With that, I yield my time back, Mr. Chair. Thank you.
Gentleman yields, and the chair recognizes the gentleman from California, Mr. Duarte, for 5 minutes.
Thank you, Mr. Chair, and thank you to the panelists today. I'm a farmer from California. I'm taking on more debt than I had last year. Not digging out, digging in. And I hear from many of my good friends, long-term farm families around the Modesto, California area in the central San Joaquin Valley, as well as banks, that we have a crisis at hand. I mean, I was not offended that we're talking about soybeans and cotton and corn today, because move the numbers around, move the words around, move the crops around, it's the same story. In fact, Mr. Hotchkiss touched on almonds in his testimony. So we have a banking crisis, and we got the Consumer Protection, Financial Protection Bureau ratcheting down lending standards, ratcheting down bank flexibility at a time when we can least afford it. So I stand with all of the thoughts today and comments on giving some banks flexibility. But at the end of the day, if a bank is lending to customers who are losing money and can't show a path towards making money, banking standards aren't really the solution. Markets and prices are what we have to look at. So I'd like to use an example for almonds right now. This year, in 2023, this last year, Australia exported 55,000 tons of almonds to China. That's up from 3,330 tons in 2018 as our tariff trade wars took place. China has a 0% tariff going in. Australia has a 0% tariff exporting almonds into China. We have a 25% retaliatory ag tariff alone exporting almonds into China. Our retaliatory agricultural tariffs against American exports, I believe, are the main driver of our farm surpluses and our low prices here in America. In 2019, we put through a market facilitation program out of the Commodity Credit Corporation that was a $23 billion program. It'd be over $30 billion today with inflation to stabilize ag markets. But it didn't target exporters. It gave money to all the farmers. So what do all farmers do when they have more of the government's money, their own money, or your money? We planted more crops. We didn't incentivize exports. So if we were to put together a proposal I've put forth to the Secretary of Agriculture, which is within his authority, I call it the Market Facilitation Retaliatory Ag Tariff Supplement, MFRATS. for about $6 to $7 billion a year, we could offset entirely the retaliatory ag tariffs imposed by our trading partners since 2018 on an annual basis. This would be cheap compared to the ag lending crisis that we're facing, which will well go into the hundreds of billions of dollars if we start to have a cascading of land values and foreclosures in the next year, which is here. And the Farm Bill will not be passed in time to rescue this. I'm sorry to say, it's a great bill. The chairman did a great job. We passed a great bill. It's not going to come to save us in time. It just isn't. So I'm looking for support for the MFRATS, Market Facilitation Retaliatory Ag Tariff Supplement. And let's make no question about this. We're taking the gloves off. We can't attribute the trade wars we're in to one president. We've got a president currently who wants to put retaliatory or tariffs on every Chinese electric vehicle sent to America. These trade wars aren't going anywhere. We won a 5-year lawsuit in the World Trade Organization against China's retaliatory ag tariffs this year, and it has made no difference in their policy discriminating against American agricultural production. So I'll leave it to the panel. I'll open it up. I've got almost a minute left. Who's with me? Do we go down this road? Do we take the gloves off and do we do something that will deliver immediate relief? Or do we wait for something else? Gentlemen, ladies?
Well, I'll just speak on, I've constantly said it throughout this hearing, we desperately need help, and we desperately need it now. We're on the verge of a crisis all across the U.S., and waiting for a farm bill or extending the farm bill is not the answer.
Mr. Hotchkiss, you know something about almonds?
I know very little, but I would need to know more about the specific topic before I could speak more.
Thank you. Any other comments?
I would agree that we would be interested in learning more about the proposal that you're putting forward.
My office has a letter prepared for the Secretary of Agriculture. We're looking for support and co-sponsors on it, not sponsors. I'll yield back. Thank you, Mr. Chairman. Thank you to the panel.
Gentleman's time expired. Now recognize the gentleman from North Carolina, Mr. Davis, for 5 minutes.
Thank you so much, Mr. Chair. Always good to see you, and thank you and Ranking Member Scott for organizing this really important meeting today. And I want to thank the witnesses, and one in particular, there's no escaping me, Mr. Dunlow. Always good to see you, and to see an Eastern North Carolinian here in Washington, D.C. You're brave soul. The financial situation of our farmers is top of mind. In Eastern North Carolina, our top industry is agriculture. The jobs tied to agriculture directly impacts our local grocery stores, our local banks, even our local tractor store. And Congress must do everything possible to help keep our farmers in business and on good financial footing. Farmers in Eastern North Carolina and across the country are caught between a rock and a hard place. They're taking on more debt, just trying to stay in business year after year, or faced with selling the farm. Mr. Dunlow, can you speak on access to cash flow and the challenges farm families are facing as it relates to this?
Yes, sir. I'll reiterate the fact of where we're at with this Farm Bill, 2018 Farm Bill, does not provide support as what I've been used to over the last 40 years. And I referenced earlier the Farm Bill that was passed out of the House Ag Committee. It meets most of our needs. But even at that, if it was passed today, it would be 25 for discovery price, and it would be fall of 26 receiving funds. So with that being said, and I know it's kind of beating the same drum, but we're on the verge of a crisis, I really believe. And hearing testimonies today, and I think we're on the verge of crisis throughout the U.S. ag industry.
How have prices changed this year in terms of input prices versus prices of commodities that you're growing?
Well, just this year, since January, most commodity prices have fallen 12 to 15% just in the last few months. And we're still at these prices not earning a payment with the safety net that we currently have.
I think it's important that everyone on this committee understands the mood out there in farm country. When you talk with other farmers back home, just like I have, and we've spoken to each other and them, what do you hear at that country store or out on the farm, just standing, talking to someone at the farm?
I'll use this example. I'm chairman of the American Cotton Producers, and my first meeting that I conducted, I went out on a limb and kind of shared with them some of my problems, my financial troubles, some of the nothing cash flowing, and we had members that represented all the cotton throughout the U.S., 17 states. And I said, if anyone else in here has heard of anybody having these experiences, a little bit of trouble, is just show of hands. And every single producer in there raised his hands. So that's what we're facing.
Well, I want to thank you for being here again and just sharing a perspective. And I do believe it's highly important, for the committee to engage, for Congress to engage and understand the challenges that many are facing out there. And I hear you loud and clear, short of a crisis. So thank you, Mr. Chair. I yield back.
Gentleman yields back. Now please recognize the gentlelady from Texas, Congresswoman De La Cruz, for 5 minutes.
Thank you, Chairman, and thank you to the witnesses for being here today. We do appreciate this. Technology plays a key role in connecting consumers with the services that they desire. There are few industries where this is more critical than financial services. While relationships are the backbone of our community banks and credit unions, technology enhances the capability of all lenders to provide services to customers. It is a big opportunity for smaller community banks and credit unions to gain access to beneficial financial technologies like AI. And I apologize because I am actually in the wrong committee right now. I'm in Ag Committee, and I apologize for that. As we're talking about things that are pertaining to the Ag Committee, I do want to talk about the agriculture sector, which in my district, being a mostly Hispanic sector and a rural sector, agriculture plays nearly 20% of the United States economic activity. And that means that the sector represents more than $9 trillion in output, yielding over $181 billion in exports, and accounts for more than 48 million jobs, paying nearly $3 trillion in wages. However, lack of market expansion, collapsing on farm prices, and increasing input prices are making life for farmers very difficult. On top of this, many farmers in my district in the Rio Grande Valley are suffering from water shortages due to Mexico not delivering water they owe under the 1944 Water Treaty. The lack of consistent water deliveries on top of increased costs and high interest rates puts Texas farmers and Texas agriculture at risk. So my question is this. High interest rates are a concern for any small business, but perhaps none more so than our farmers, many of whom rely on financing for annual operating expenses. Does any witness want to share their perspective on how big of an impact the doubling of interest rates over the past couple of years has had on the ag sector? for specifically your area of expertise? We'll start with corn.
I would speak to that a little bit. There again, in my situation, the last 2 or 3 years, as we come up short, the crops are not paying out, I had to go and refinance some farmland. So that in turn, you're paying interest on back debt along with interest on your loan next year. And both of those interest rates, have doubled. So it's just a snowball effect. Once you get in trouble, it's all very difficult to get back on top.
So I thank you for that, and I'd like to expand on that for just a second because, as you know, I'm on financial services, so I'm coming from that hearing over to this hearing, and there is a lot of overlap. And we have done on my side of the aisle, done a lot pushing back on the Basel III proposal that could negatively impact our farmers. Can any of y'all explain how the impact of the Basel III will have on the farming sector?
Thank you for the question. I had spoke to that a little earlier. In its simplest form, the requirements under Basel III will increase costs to banks, which will be passed on to their producers, and that's just one more cost that they're going to have to increase costs that they'll have to manage in addition to the interest rates, which you've already brought up, and input costs, land costs, labor costs, et cetera. So that increased costs, as well as from a banking perspective, the increased capital requirements that Basel III brings is just something that we would support it going back to the prudential regulators for reconsideration.
Thank you. I yield back.
Gentlelady yields back. Now please recognize the gentlelady from Oregon, Congresswoman Chavez DeRemer, for 5 minutes.
Thank you, Chairman. Good afternoon. Thank you for being here, and thank you for allowing me to be one of the last to ask questions and visiting with you today. My first question, Mr. Hotchkiss, in your testimony you mentioned that over half of young farmers say they need access to more land. Can you talk to me about the young farmers you see entering bank branches? Are you seeing any trends toward younger and first-generation farmers getting involved in farming and thereby accessing credit?
Thank you for the question. We do see young farmers, they come in. It's generally someone who is from a farm, might have been farming with their father, their uncle, their grandparents, and they're wanting to break away and start something, set their own legacy forward. And it is really a struggle. It is hard for them to get started and to obtain the credit they need without the programs that are available through either USDA, in the Farm Bill. I want to thank this committee again for proposing increased limits, separating operating from real estate. That allows enough access to credit with a guarantee behind it that can help those young farmers. The down payment assistance program is something that is going to aid those young farmers to get into the business. But as I've also said, one of the most difficult things to deal with is they'll come in and they'll talk about their operating budgets and their struggle to be able to themselves put together a reasonable operating budget because it just doesn't pencil out. The costs are so high, and so that's, to me, that's why not only is the Farm Bill so important for this year, because it brings certainty not only to the farmer but brings certainty to the financing side. And it needs to be passed. We don't need an extension. We need something that can help now and go forward. And then also, lastly, I would just say support for ACRE, which is a way to reduce costs, not only for young farmers, but for all farmers.
Perfect. Well, I'm going to follow up a little bit on interest rates since we're talking specific to people accessing credit and what that looks like. And we're talking about home ownership, not only purchase of land, but home ownership. A distant dream for many Americans and certainly young Americans, as we're seeing across every sector. Coming from a state with an affordable housing shortage and a homelessness crisis, the issue is top of mind for me in Oregon. Aside from those high interest rates, can you speak to the obstacles that also stand in the way of rural Americans purchasing homes?
Availability and sometimes cost. But once again, fortunately, I'll reference back to the Acre Act. It's not just ag real estate. It's residential mortgages in rural communities of 2,500 or less, and that would help reduce the interest cost and allow a lot more people to qualify for mortgages.
Okay, well, I'm going to move on just a little bit. Dr. Alantoli and Mr. Dunlow, thank you both for your passionate remarks earlier and frankly your honesty. We are repeatedly told that conditions in farm country are not great, but to hear your on-the-ground perspective as producers who are seeing the effects of low commodity prices and rising input prices, it really sends a message home. It's been noted that as the production expenses are forecast to remain high, the highest in history, producers will be forced to rely on increasingly more debt. With these added pressures, it seems at all but inevitable that the mental health of farmers and ranchers will be strongly affected for an industry that already has high suicide rates. My question for you both is, what can be done to improve mental health for our farmers and reach them before it's too late?
Thank you for the question. I certainly think that as we move through this fall and into the winter and spring, we are going to need to be able to reach out to farmers. In Minnesota, we actually have a dedicated line for farmers to call into that are experiencing some mental health concerns, and there's a series of counselors that they would be able to access. And so I would say that something to that effect is going to be important across the country.
Mm-hmm. We're seeing it more now. Mr. Dillon, do you have anything to add?
Yeah, just a quick comment. I had talking to one of my friends he had a friend that went out of farming because of financial situation, and actually he was helping talk him out of doing something like that. So I would certainly encourage this committee to move forward to advertise these numbers, these help, that someone can call and get help with.
Yeah, and for any farmer or rancher or any industry as well, when things are tough, accessing credit, paying, your families are counting on you. And that pressure on your shoulders is hard when you know that other families and their children are counting on you as well. So I'm about out of time. I did want to bring up Ag Labor Working Group that we recently had, and I was proud to be a part of that effort. And while the Ag Committee does not have jurisdiction over ag labor, we are a vested interest in meaningful reform to the ag labor workforce. So I'll hold my last question, but just know that that's on top of mind for me as well, and I thank you all for being here today and sharing your perspectives. With that, Mr. Chairman, I yield back.
Well, Gentlelady yields back. Seeing no other of our members here for asking questions or for additional questions, I'll just proceed with some closing comments. I want to say thank you to all five of our witnesses for, for bringing your experiences here to Washington, because we do our jobs better when we use what God has given us, and that's 2 ears and 1 mouth. When we make the effort to listen and to listen to the voices of rural America, or what I call essential America today, and quite frankly, the agriculture industry, which all of you represent in different ways, sitting at the table. I think the points that you made were crystal clear, and I think that they reinforce the need to get this farm bill passed. We've had a lot of naysayers in this process. We had those who said naysayers and who said we'd never be able to put a farm bill together. Well, we proved them wrong. They said we'd never be able to pass it out of committee. Well, we proved them wrong. They said we'd never be able to do this in a bipartisan way, and we proved them wrong. And there are those who are saying we'll never get to the House floor, and I guarantee you we will prove them wrong. And the reason for that is the arguments that you've made of why this is important to do now. To provide that certainty, to show our farmers, our ranchers, our foresters, our processors, the people of rural America, that we've got their backs and that we stand ready to provide them what they need. And that's what the Farm, Food, and National Security Act of 2024 is. And so it's I really, really appreciate your making the sacrifices you made to be able to travel here and to be able to share your insights and your expertise. Under the rules of the committee, the record of today's hearing will remain open for 10 calendar days to receive additional material and supplementary written responses from the witnesses to any question posed by a member. This hearing of the Committee on Agriculture is adjourned.
No.